Okay, so hey Shiva, how are you, brother? Let me know one thing please, that my stream quality is not laggy or it's actually good enough, because OBS it's saying the stream is actually good. Usually it goes excellent, but it's showing good right now, so I'm actually expecting some sort of lag or something in the stream. So if you are getting any lag, please let me know so that I can try to increase or decrease the bitrate on the stream. Okay, and yeah, welcome. Today was a excellent day for me. So the 1440p, let me check the quality. Yeah, I mean it's not that bad, to be honest. Now this one, I think its job has done already, so let me remove that. I think the quality looks good. Is it good? Let me know so that I can continue. Hey Ninja, welcome brother, how are you? Hattori, Ninja Hattori. Okay. That's a good name. I like the name, bro. Ninja Hattori. Today I couldn't find any trade in silver bullet. Okay. Shiva, you made me disappointed, brother. I was expecting something better from you today, because today was the perfect day to find the silver. Yeah, I mean, not disappointed. I'm sorry to actually say that. Let me rephrase that one. I'm a little bit heartbroken by knowing that you didn't find any silver bullet. By the meantime, I actually made, let me bring back the photo. This was the PNL today from, I don't know if you can see that. I'm zooming, of course I'm zooming too much, but I hope it's visible to your end. It's $2,932.88 per account, because I anticipated the move until a certain level, and I took all my positions off over there. Of course, on the way I took some partial. I will explain the silver bullet in a second. Just give me a little, like couple of minutes to get some more people in the chat so that they don't miss the setup, because a lot of people I can see they are talking about my silver bullet strategy. All at a sudden people are actually looking into that video right now. So yeah, if they are finding it valuable, this lesson will be somewhat valuable as well to them. So I will definitely give you the entry of the setup. There are so many good entries, so many good setups over there, so I will definitely show you all that. Now by the meantime, as I'm not willing to keep the thing on this chart, so I will just switch back to another one. Congratulations. Yeah, thank you brother, thank you bro. आप कितने year में profitable बने? Okay, so मैं ऐसे तो ट्रेडिंग शुरू किया, सबका स्टोरी सेम ही है भाई. First of all, Hindi I didn't learn it from anyone else. Okay, like it's just by listening to the songs and watching the movies, things like that. So I might be making some mistakes in terms of grammar, but yeah, I mean it's not intentional. Or I will try to speak in English, because so many people might be looking into the thing from different countries as well. So my journey started with crypto, but not as a trader, but as a somewhat like as a investor who invested in crypto. At the same time, I was trying to, it's the same story. You will hear the same story from every single person on the trading field. Even ICT don't like crypto, you will find the same exact story from every single person, because everyone had the exact same starting. So yeah, I was investing in the crypto rather than become like trying to trade. So once I got some profit out of the crypto, that is when I choose to go for a little, you know, like trading type thing. So at first, when I learned the whole thing, like technical analysis, things like that, when I learned it, let me switch back to the other chart so that I don't actually mess my genuine levels or other stuff. Once some people joins, I will actually try to explain the silver bullet first. My 9k or 9.5k whatever I have made together, I will show you everything. Good night, brother. Hey Viko Rahman, why good night already, brother? Oh, okay, I know you are from, I think, Fiji, or what was the area that you said? I actually forgot. But okay, Viko, since you are here, let me actually, because I know you were talking about the silver bullet so long, okay, for so like you have sent me so many comments on that one silver bullet thing. So if you are still here, okay, Bali, yeah, I'm sorry, I said Fiji, but Bali, yeah. So anyway, this is where 3 a.m. happened, right? Like the 3 a.m. So silver bullet started from here. By this time, let me go to a reply mode. I will give you everything. Just like give me some moment, everything will be clear to you guys. You see, this is the Asia sell side, this is your low. On this area, what you can see that there is your 15 minutes fair value gap right here. This is 15 minutes chart. This is the huge 15 minutes fair value that you are seeing on my chart. Inside of that fair value, I had a 1 hour breakaway gap as well. So on this chart, if I go to the hourly, you will find that area as well. So if you have that drawn over there, hourly here, so many lines. I was actually teaching one of my younger brothers something, so that's why you are seeing so many lines during these moments. But I will try to actually, let me go to another chart so that it doesn't make too much of confusion. So as you can see here, I have this fair value on the hourly, which should act as a breakaway gap. So market should not, like, this is the expectation from the market. It should not fill up the entire fair value gap. So that's the hourly breakaway gap that you can see. Inside of that, you have this huge order block. Okay, why this is the order block? It fulfilled its criteria. It has to have fair value inside of the range or at the order block level. It has a fair value at the level and inside the range. It has to either take some liquidity or it has to come out of a previous fair value gap. Look on the left, you have so many fair values sitting here, or you can see it has this fair value as well. Also, it is coming out of another order block level. These move where the order block happened, that took the liquidity, created a market structure shift and created fair value. So that was your order block, right? These three candles, because that has the lowest down close candle, and these two candles are sitting inside of that range. So that's why these two I'm just trying to ignore at this specific area. When that happened, also on the left, on the 4 hour, around this area, you have a huge fair value as well. But this fair value was perfectly traded over there, that order block created. Now this order block has taken until this swing loss liquidity and also some other levels as well, and it's coming out of that order block. So this is now a valid order block for me. When that valid order block happened, or if you just disregard every other information on the left, it has to take liquidity. It has taken liquidity from that swing low. It has taken liquidity up until this far. Even no, actually there is a thing that I was actually willing to teach you guys today, but just disregard this part. I will come back here after explaining the silver bullet for a second. So when that happened, this order block was a valid order block. When the hourly first fair value and the second fair value gap was formed, market did not, at the first moment when these move happening, market did not traded inside of that breakaway gap. Now I don't really need all of them today. Keep this in mind. Your high probability fair value gap will form inside of a higher time frame order block. This is a hourly order block. So I usually look into what? 15 minutes. I told you to look into 15 minutes. Your high probability fair value gap will form inside of a higher time frame order block. Now if I drop back to 15 minutes here, that's the only order block range that I have marked. Look into your fair value gaps over there. Where is the fair value? This is one fair value that's aligning with your order block range. This is another fair value aligning with your order block range. Now here is the thing, why I looked into the hourly is because there is a lot of things going in the market. I will try to explain all of them. For now, keep this in mind that it's coming inside of a order block. So this is your high probability. Now there is a small little fair value. I'm not marking this one. Why? Because when a market structure shift happens, in this case, this is a valid high that can shift your market structure, and that is a swing low as well. If you look properly, this is a swing low. So that's the last leg of the swing from where market has taken the liquidity. Yes, I can see it has taken from here as well. So if you count this one or even this one, either one, what can you see over here? You see this level, you see this level, okay, like the swing low level. This fair value is sitting below your previous low. So this fair value is not a valid fair value gap for you to look into a trade. Why? Two reasons. Remember the 1 to 3 move from the previous. You see from this low, market went until that high, market came lower, market went back up again. So where is the unfair part of this move? Above that high. Okay, so I'm just drawing, pardon me for that. So above that high, this is the unfair part. Now let me remove this one and let me show you the retracement today that happened. How far? It's very close to that unfair area. Below that, market does not need to go because that is balanced. That area is balanced. Your 1 2 3 move happened up until this far. Okay, why I'm not counting that? Because this is the lowest market risk. Okay, it went up higher. You can now call this is also balanced, but mostly the lowest swing low, like from where the 1 to 3 move started, was from here. Now this is might be some like little advanced level. If you are missing those parts out, disregard all of them. Just keep in mind that below the low or liquidity level, if there is a fair value, you are not expecting market to reach there, or if market reach there, this fair value or the move you are looking into becomes a very low probability. Why I'm saying this again? Think this way. When market is coming here, it has one fair value, two fair value. If this is the low and high you are looking into, then you have a breaker, you have a order block. Fair value is sitting at the very lower end of this entire move. So what is the probability that from here, when market is disrespecting these big fair values and your breaker and the order block opening price or whatever it is, all of them, it's coming all the way back to this fair value. What is the high probability that market will respect this and market go higher, rather than taking this liquidity? Along with that, you have this low as well. So you have relative lows. So from here, this high is too far for the market and this low is very close to the market. So market can easily take the sell side one more time, find some other imbalances around that low, and then it can go higher, right? So this is why this one becomes a very low probability. On the other hand, how far market reached up until today, like before all this happened, okay, let me actually, I hope it just clears from the right. Okay, yeah, beautiful. From the low until that high, see the OTZ, look how beautifully it's aligning. Now why I'm looking until that high? I could have looked until this high or this high. Now why I'm looking there? You have your answer in front of you. Did it reach there inside of the fair value? No. What is the new high it created? This high. This retracement, did it reach here? No. What is the new high? This high. This retracement, did it reach here? No. What is the new high? This high. This retracement reached there. So this is the area from where market can give you the proper setup. But what is this low? This is your Asia session sell side liquidity, right? So you are expecting this liquidity will be grabbed and then market will give you the delivery for the buy side. Now I know this is the buy side, like these equals are the buy side, but I marked up until this far because from taking this liquidity, market cannot just start to fall. There is a fair value gap from where it can possibly fall, right? This is the only bearish fair value from where it can possibly fall. Now I hope you got my point of this whole retracement. If you have, then here is the other thing. Remember, there was an hourly breakaway gap as well. So when market was coming here, market had literally this far to retrace. Now because of the hourly breakaway gap, what do you have over here? See, that is your hourly breakaway gap. Why this is a breakaway gap? Look at this as well. You see this low, that high, this low. This is your hourly breakaway gap. So when market was coming lower, it has created a balanced price range inside of that area on the hourly. You see, this is a balanced price range or BPR. When the balanced price range happened, market does not need to go the whole way. It can go by a little. It can keep the portion open. If you don't count this as your balanced price range, think this way. This is the first fair value. Your market structure shift happened with another fair value. So you are expecting this to act as a breakaway gap and this to act your entry gap or fair value gap, right? The first fair value rule. So let me remove the 15 minutes. So again, all those other confusions. First fair value, second fair value. What are we expecting from here? If market can reverse or retrace from this area, that is a good thing. If not, then even if market comes here, you are expecting some of the portions will be unfilled. So let me just remove change the color so that you can understand, and bag. Okay, so market did that with that move. Here is another thing that you might be saying me, or you might be hearing me saying this for the first time, which is when a fair value is in respect, you will see market will just tap barely with a wick and it will give you the reaction or rejection immediately. In 15 minutes, that's exactly what market did. In hourly, it's also the exact same thing. Now to support this idea, let me give you one more thing from the higher time frame, on the weekly time frame. You see this fair value. When market was coming here, it just created a wick. You found the immediate reaction. See, until this far, market didn't take the buy side liquidity. If you understood this part, on that week, you could have easily targeted that high. It looks very small, right? Let me go to a daily or 4 hours. Now it's all at a sudden looking a good range. This retracement and that high, is it a good range now? Okay, if not, 15 minutes. That retracement and that high will make more sense right now. Let me find that area. Is it a good range right now? Because to understand the candle, this is how you are looking into your chart. That is how far you are looking into. So if you had those things, you could look for your entries up until that buy side is taken. And what did I said about the buy side is taken? If there is a fair value at the same level or in between the retracement leg, which is from this to the high, this level, if there is a fair value, you can expect a little continuation up until market fails to do so. You see that market came retest into that area, market continued and took that liquidity. Look how many times it retested into that retracement level. It retraced, it continued. Now at this level, market failed to create a fair value, but still it continued. Because of the bullishness, because of the trend, you had more chances to hold. But how do you define that market can fall from here? That's the lesson I'm willing to upload very soon. Okay, so that's something I have just showed you. Even here as well, see the fair value tap with the black candle, it's just the wick coming inside of the fair value. You saw the immediate rejection, so that is a good indication that market will go higher. Now if you have asked my accumulation, manipulation, distribution, then look into that retracement. Where did it happen? From the low to that high, OTZ, that is where you had a bearish fair value or inversion fair value. Market revisited that area, or you can call the order block as well, it's up to you, because I expect a fair value on the right side to become a high probability in that range. In this case it has created at the high of the order block, but mostly this is the area that aligns with your OTZ. That's how far market came, started going higher. So same thing, what happened here? Accumulation, manipulation, distribution. Market took the buy side first as the manipulation move, market started going lower. Now here is a funny thing that you can actually utilize in terms of your trading journey. There is something called peep range. Market usually moves like this is a higher time frame. If you go to the lower time frame, you will find even a better option. So it's like 10 increment move or something, usually 5 increment on the lower time frame if you're trading like 1 minute or 5 minute, things like that. So what do I mean by that? From the high you can expect market will give you at least 20 handle or 20 peep, however you call this one. Usually they call it handle, that's why I'm saying. So market can give you the 20 handle move from the high. That's exactly what market is doing, like that is the range it is giving you for here. Okay, the manipulation happened after it's coming lower. Now it went 50 handle, even better. If you are still holding your trade, you got even more profit over there. But accumulation happened, manipulation happened, distribution happened. Market traded back into the range after coming all the way back here. I will explain all this thing. Market revisited that. Look at that high, look from the high to the low, that is your OTZ. So market revisited up until that high. This high had to be protected. Why? Because if market take that high, then market will take the all-time high as well. Market went there. You have your liquidity graph from multiple levels. So this is the 2022 IT model that you can expect over here, which is this is your liquidity graph on the 15 minutes time frame. This is your market structure shift, even you can call here, but since there is no weak or defined low over there, I'm happy to call it here. Market created first fair value, it should act as a breakaway gap. Market can either trade like not trade it at all, or if market is trading it, it has to keep some portion open. So how does it look like, the entry? This is the fair value. You can either enter using the OTZ. Okay, look, it came up until the OTZ, then started delivering for the sell side. But you can enter either from the OTZ, or if it aligns with a fair value gap, this is the entry fair value. So even if you enter from the low of the fair value, okay, it's a huge fair value. Usually I said, like, if it is a huge fair value, try to go at least 25%. You didn't enter from OTZ. Now I'm not, because I'm seeing this, I'm not gonna say your stop loss has to be above that high or above this level, something like that. No, I have my breakaway gap over here. If I took the entry on the 15 minutes time frame, my stop loss has to be above the breakaway gap, and if it does not cover my order block mean threshold, let me make it little bigger so that you can understand. If it does not cover my order block mean threshold, I must have to cover the mean threshold as well, which is like at least the mean threshold. Okay, now in this case it is not necessary, because you have a breaker over here. So first level of defense, second level of defense, third level of defense. If this is broken, market will go and take that liquidity as well. So your stop loss now covering mean threshold, that is where you can put your stop loss. Now usually I like this one, because if this is a breakaway gap, market should not cover it fully. So that candle's high is my favorite area to put my stop loss. But this is the optimal area that I'm showing you, like this is the best possible area that you can utilize in terms of that. Now, another thing is, you see this swing high that happened and then market delivered lower. I will go back to the target in a second. Let me draw another fib from the high to this low. Look, it went above your new like this range, it went above the equilibrium level, so your entry is happening in the discount. If you know that, you can at least target the equilibrium of the fair value part to enter into a trade, if not the 6-2 level from the original dealing range high to low. Now wherever you entered, let's say you entered here, this is your first target, like nothing before, nothing before, like these lows, or nothing lower. This is where you must have to take a partial if you have the option to take that. Now it's not a huge risk to reward, as I said, like your entry had to be in a calculated way. If you did that, the risk to reward might have been that. But what I said, if your liquidity is not giving you 1 to 2, go for 1 to 2. Let's see, this is the 1 to 2, market delivered you that, then market went higher. Now because I'm seeing this, that's why it's happening, or I have showed you so many times. From the calculation that started here, if you kept the whole thing in mind, this retracement would have made sense to you. Now as you can see, like there is this fair value that market did not traded. Why? Think this way, this is a fair value that market did not traded while this high was forming, because as you can see, this is the first fair value of that move, entire move, so it should act as a breakaway gap. Market can either trade it or not trade it at all. Here is your second fair value, which is a very small one. Market can fully trade it, no problem with that. It has traded and disrespected it. Okay, then why it went up until this far? Because if you look on the left, this is your breaker, and these all 4 up close candles are your order block. So I'm not marking it, but as you can see, with the breaker you have the order block as well. So market has too much resistance over there to even reach until that fair value. Okay, even I'm making it up, I don't know, like I thought it didn't reach, so it even reached over there. Okay, now I have even better option to give you guys. Why? Look at the common area, guys. I talk about common area, now look at the common area. See, like I didn't even realize that it actually reached until that far, but it is what it is. So that was a good area to enter, but I'm not saying because I'm seeing it. The entry is after the retracement. If you find your market structure shift with fair value from here, it has delivered what it had to deliver. Now this is a like in a 15 minutes time frame I'm showing you all of this. So the target is something like 395 handle. This is nearly $8,000 worth of move, and even the stop loss is nearly $4,000 worth of a stop loss. But are you doing it this way? This is why if I entered at least from the equilibrium of that leg, now my stop loss is going lower, my move, like even this liquidity is giving me even more. Okay, I don't even need to hold until that low or 1 to 2, that extended level. So entry is very important where you are taking it. A stop loss is also important. For example, if I put my stop loss here, now to get my 1 to 2 from that entry, I have to extend it even lower, something like that. Okay, so there is a high probability that if you make this sort of calculation mistake, like if you make the mistake with your calculation, why? When market took this liquidity, along with that it has cleared so many other things. It's coming from a very strong area of resistance over there. It giving you market structure shift with multiple fair value gaps. So you are not expecting this fair value to be filled because it's a breakaway gap. That's the only like first fair value. This is the second fair value that you are expecting as your entry fair value. Now this is a huge fair value, as I'm saying. If I see something like that, I try to enter from the 25%, but from the high to the low, at least I'm willing to see that it's reaching for the discount end of that entire move. Sorry, the premium end, because this is a sell short setup. So on the premium end, that is where I'm willing to enter, or at least from the equilibrium level, if not the premium end. That's exactly what it gave me. Bro, please zoom a bit if possible, more, or now it's okay, I don't know. If the price goes there, then the price is no more bullish, it's already turned into, yeah, exactly. Murad bro, exactly that's the case. I mean, I know which thing you are talking about. I'm reading it later. That's why maybe some people might not understand, like the earlier silver bullet. Okay, so that was the whole concept on the market during that. Now, my silver bullet strategy, let me come back to that on last time, which is from this fair value. I hope by now you already, okay, I was actually looking into the hourly as well. So on the 15 minutes, by now you see this fair value, like the lower one, it's sitting below the liquidity levels. I'm not using that fair value anymore. So my breakaway gap from this one is shifting to this one. I'm expecting this to act as a breakaway gap and the first fair value to act as a regular fair value. Price can fully trade it, it can even disrespect it, whatever it is, it can do that over there. Now when price traded inside of that and took this Asia sell side, look, the body came back inside the fair value as well, but I'm disregarding this fair value based on it was completely filled over here. So if market is taking this liquidity, it must have to reach to that fair value before going higher. So this is where my eyes were. Now let me go back to 1 minute and that fair value area. In 1 minute, that was the Asia sell side liquidity, this one. Market has taken the sell side with a huge move. This is the move that most people gets confused, but let me give you this area. Okay, on the 15 minutes I have a bearish okay, this is a different chart, so let me go and switch the chart for the second being. So what I'm expecting from this specific area, first of all, the silver bullet started right around this candle. So what is my expectation based on my silver bullet strategy? If it takes the Asia sell side, if it can reach your higher time frame point of interest, which in this case I had 15 minutes and 1 hour, right, at the same exact level, and the both of those fair values are supposed to act as a breakaway gap. Is the 1 hour also having the portion open? Yes. When market started going higher, now this is where the experience come in, but I'm not gonna say like this is where I entered. Okay, like exactly on this candle when it tapped into the fair value, that is, this candle was my entry. Now here, okay, this is, I was actually editing the video, I don't know if you guys can see it or not, but that is my entry. Okay, I was editing the video for you guys and I realized like the whole time my microphone was off, so I didn't expect. Now look, one thing guys, here I will come back to that area as well, but you see when market was trading, this is a live live recording that I have done. When market was trading, what I'm expecting, I don't know why I actually looked into that mean threshold over there, but look what I'm doing and what exactly happens in the market. Just give me a couple of minutes with this one. Okay, I'm just annotating everything so that people can understand. Look, I'm expecting a lower run to that area and then a boom towards the upside, and then just a few minutes later from that order block mean threshold, look, that's the exact, look, from here until that far I didn't mark any other fair value. Okay, why? Because this 15 minutes bearish fair value, that market turned into a inversion fair value. Usually the 50% of that fair value should hold the price. When market go back again above the above the fair value, it will close above, it will come and tap on the upper portion, it will not come even to the 50% anymore. Look where my stop loss is during that retracement here, because I'm expecting this is the only level from where market can go higher again. So accumulation happened, I was expecting it before that happened. Okay, like look at my drawing, I don't know where okay, here, see, I was expecting that this accumulation is happening, a manipulation towards the lower side inside of that fair value. Look where my stop loss is, already my stop loss is there. I didn't move it after the reaction or anything, I moved it way earlier when market closed above that area, above that bearish fair value. So below that, these fair values are not that important. Also there is another thing, I'm coming to that part as well, but below that it's not that important for the market anymore. It had importance here Same with this breakaway gap, it was sitting below the liquidity level. That's why that gap market will not revisit or retest, but still I marked it as a breakaway gap in 1 minute because it's a very lower time frame. Also I have some volume imbalances over there, so just because of that I still kept it up until market went higher. I moved my stop loss immediately. I didn't even wait here. Like before that I actually moved my, look, when market was going higher, when did I move my stop loss? Look, the stop loss is right here when it started going higher above that fair value. Already my stop loss is here, so I didn't had to wait anymore to see if market is willing to come back around that breakaway gap or not. Okay, so these are the things that I'm anticipating from earlier. Now market gave me the move, came exactly on that small little fair. This is why I don't care about the size of the fair value, as long as it is a fair value inside of a valid area. That can be the area you can target for market to reverse or retrace from. See, like I was expecting that. Now here market closed above that area. I will come to the real chart and explain it. Just give me a moment, don't lose the patience or hope. Okay, once that happened, market does not need to come back to the CE anymore. It can come towards the upper portion or upper quadrant, then it can give you the move. Now here will be another thing. Just look, you see that FVG line has been sitting there for since that high. I just cleared that. What is that FVG line? There is no FVG, but I'm seeing, expecting a fair value gap here. Okay, look at the move when that happened, and if market is giving me the fair value over there or not. See, like that, expecting. I am writing it before it's happening. Now what is that MT and OB line? It's the 15 minutes order block from the bearish leg. I'm just willing to see how market is reacting. When the first time market traded here, market came lower. Instead of taking this sell side liquidity, it traded back again over there and took that buy side liquidity. I was pretty confident that my manipulation will happen on the lower side, and the next time market will go to the mean threshold, it will break through that, create a fair value over there. So everything that I anticipated during a trade, it worked out perfectly. Now let me go back to the chart and let me explain the entry as well. So my entry, I was like, this is the thing, like I'm taking silver bullet for a long time. This is the only session I trade, so I know a lot of things during that. This entry is not a very high probability entry because there is no market structure shift over here, and also you have a bearish 15 minutes fair value sitting right above your head that previously market traded and came lower, which is this one. Okay, that's the only bearish, like the first fair value of this move. Okay, when market was here, see, like no, I think I'm marking the wrong one. Yeah, so there was another one here. Let me show you this one first, then I will show you this one, this bearish one. Okay, look here, market tapped into the lower portion, market went higher, market tapped the middle portion, came lower, took all the liquidity. So this fair value, until it's broken, this entry is not a very high probability. But as I'm saying, that my experience is telling me that this is the move that I should utilize to enter into a lower price action. This is not the high probability. When the high probability happened, like the silver bullet entry, the original entry that you could have anticipated, was when market created this swing high. Okay, let me read some comments and then please zoom. Okay, I think read that part, bro. I mean, if you can make the chart bigger, not zoom. I really don't know, bro, which, like this monitor, it's a 32 inch, so maybe because of the monitor it's not clearly visible to a lot of people. But if that is not the case, then I don't know actually. Like, wow, okay, hey, welcome whoever subscribed to the channel. I cannot see on my chart because the OBS studio is minimized. So anyway, 216 there, you weren't 260. Okay, no, it's okay, brother Hardik. It's okay. I'm not sleeping because yeah, I mean, it's okay. Yesterday, as I said, like, yes, if you saw my community post, I have posted like yesterday. I was not, first of all, after returning home from my work, I was not feeling like trading, but still somehow I forced it. So the very first entry I took, I lost nearly 750 or $80, something like that. After that, I went to bed. So I had a very good sleep after losing the money. Okay, so I didn't even consider looking into the chart for the rest of the day, and that's why I don't have anything to show you guys from yesterday. And as you know, like, I usually risk somewhat between 600 to 750 in my trade. So based on that, my first entry was a loss. Yeah, I could go for another entry later on, but I was not feeling like it. Once I hit the loss, I thought, okay, if you are not willing to trade, do not force it. I just went to bed. So I slept. I had a very good sleep. Hi T2. Hey brother Ganesh Kartik. This is not T2, brother. This is T2's friend Asif, or AK, however you call it. My nickname is also Mr. AK, the way Ali Khan's name is. Okay, you can call me AK. That's okay. But anyway, so because it's Asif Karim, that's why, short form. So yeah, what I was saying is, this entry is not a very high probability entry. Which entry can be a high probability? After this market structure shift happened, like this high is valid for shifting your market structure. If you did not wait here or took the entry here, then that is where your market structure shift happened. Once that happened, you have to wait until this fair value, the only fair value from your 15 minutes chart, okay, this has to be broken. When on the 15 minutes time frame, market has broken that fair value, this fair value, okay, this is the candle that broke the fair value. So where did that candle ended up after breaking? So this candle, I think this candle, let me put a mark and let's see what it looks like. And I hope this is not the hourly. Yeah, exactly, that's why my inversion fair value is not making sense over there. Let me just fix the sheet, because there is something else as well. This was the fair value, and if you see on the 15 minutes now let me fix the thing. Middle line, the rejection, this one, the first one, this one happened during what? During the break. You see, this break didn't happen up until this rejection. When market closed above, which supposed to be at 44 or something, yeah, so this 44 candle, when market closed above, this candle was the first time market closed above. Now what you are willing to see? A rejection from 50% level. Here, this is what we call a mohawk. Which is a mohawk? Look at the 15 minutes time frame. No body closed below that, but here in 1 minute, one candle's body closed below it. The immediate next candle closed above and closed above the upper, like above the 15 minutes fair value as well. This is where you also have a accumulation, manipulation, and a distribution you are expecting right now. So where could have been your entry in the silver bullet for the entire move is at this, okay, at the high of that 15 minutes fair value. If you know how to use it, this was your entry, this is your stop loss, targeting what? This buy side or the Asia buy side that I anticipated up until this far. That is your target. If you want, you can close some partial at even these relative equal highs, or at 1 to 2, however you want to target it. And after that, if you can move a runner, that if you are seeing that this last fair value of the 15 minutes is broken as well, which is this fair value, when it was broken, you could move your stop loss below these lows, or even below the 50%. There is a small little fair value and a what it calls the propulsion block. You could have moved it there, okay, so your entry could have been here. Now there was another entry. If you didn't focus on this part too much. There was another entry, but that was also a tricky entry. How? You see, from that high until this low, where is the first fair value? Again, I'm looking into the structure. You see, that is your first fair value. On the bearish side, this is your first fair value. When market broke and closed above that, this is the first time market revisited this one. This is 1 minute. So in 1 minute, you don't need all these things, right? You are just skipping everything on the left. You are just entering from this part, which is this part. When this market structure shift happened, okay, like exactly with this candle, let me remove the 15 minutes now. When this is a valid high to shift your market structure, because this is the internal swing high that can be valid to shift your market structure. Also, that high was created after market trading a fair value, bullish fair value PD array, and when market is breaking above that level, it's already disrespecting the bearish PD arrays around that area, right? Why this huge fair value is not important and this small little fair value is important? Because from the high until the low, where is those huge fair value sitting at, and where is the rest of the body? Like, look at the huge fair value and look at these two fair values. Where is it sitting? From this area until that area, this is your premium. So if market is going lower, these are the areas from where market can go lower. Also, if you draw the OTZ, it will make even more sense. Now look how far the first retracement was, or the high that it created. Inside of that, now market is coming lower inside of a bullish PD array. It's respecting that. Now it's disrespecting that. So inside of your premium array, this is the first fair value, which should act as a breakaway gap, and this is the second fair value, which should be your sell short entry gap. But since you are already bullish, because it has taken the Asia sell side, it is coming out of a 1 hour and 15 minutes fair value gap from the premium from the discount array on a bullish move. You are expecting these fair values will not be respected. So after that happened, what market created is a first fair value until this far. This is your breakaway gap, and a second fair value up until this far. This should act as a fair value gap from where you can take your entry. Now, why market did not come here? Because this fair value is sitting inside of that bearish inversion. Remember, this is the first fair value that market broke above. I don't know if you guys are getting confused or not by this one. Everything will make sense after a few days, or if you observe the market this way every time, it will make more sense. You see this first fair value, when it broke above, look into my channel, the stream that I have done with that 75k challenge. From that stream up until today, how many times I have talked about this. So if you even disregard everything that was inside of that area, when market broke above that first fair value, retested, that was your entry. A stop loss could have been below this one, or since it's a breakaway gap, you can put here, because that is the first move that actually started and closed inside of that fair value. From there, market started going higher. Now, using the same information, okay, this was another area where you could have possibly entered, or if you were too eager to enter from here, remember, always expect to enter from a close proximity rather than from the exact fair value. So this is like, since it didn't came inside of your fair value and it is showing already some rejections, you can take a entry at the close proximity. So if you didn't take entry here on this low, when this was coming very close to that level, now you can enter from that at a close proximity. So maybe around this area you could have entered into a trade. I don't know how you look into your chart, but that's how I look into my chart. Okay, when that happened, market was doing all of this. You know, by now market has already broke above but closed above a 15 minutes bearish fair value around that area. Okay, that I explained inside of this leg. So this one turned into my 15 minutes bearish inversion. Let me go back to my editing one more time. See the 15 minutes bearish inversion exactly sitting over there. So that's what I was showing you over there. Now inside of that bearish inversion, why these fair values are not important or I didn't mark in my video that I'm actually in the process of editing or something, because of the exact same reason. This is the bearish fair value. Market has broke above that, market has traded the upper portion in 1 minute. Now market has started going higher, it has disrespected even the 15 minutes fair value and turned it into a inversion fair value. So market should not go all the way back to revisit these fair values anymore. That's why I didn't even mark those fair values inside of my video or inside of whatever you are seeing over here. See, nothing I marked over there even from the beginning. Look, from the entire move I have not marked anything but the inversion and the retracement zone. I'm writing that market will retrace up until this far. Okay, that is the retracement zone. Why that is the retracement zone? Remember the 1 to 3 move, I was writing that this is where market will retrace and I was looking for a fair value inside of that area. Remember, where is the fair value? Here is your only fair value that aligns over there. It's a very small one. Market tapped there, then this is the move you are seeing from that area. Okay, this is the move. Now you think a small fair value is not important? No, if you know the level then it is important. If you don't know the level then a small fair value is not important. Because why I was expecting, remember this, okay, if market is willing to go higher from the highest up close, like highest wick that it has created or the high it has created to the highest body, this is the area where market should create a fair value and revisit that fair value, and immediate rejection should have to happen. By the meantime it has given me, like it has given me the fair value here. By the meantime it has given me accumulation. I was expecting a lower manipulation to this fair value that I already showed from that editing, that even before that happened I actually draw that thing. Okay, I don't know where exactly I have drawn it, but I already showed you. I hope you know that somewhat around this area, I guess. Yeah, so here, see, like even before that happened I was actually drawing that I'm expecting a retracement up until that. You see the like drawing even I have done. I'm expecting up until that fair value, then a move higher. Okay, then that's exactly where market came, started going higher. Now I had a huge day, that's why I didn't consider, I was running in a huge profit already, that's why I didn't consider adding positions to my winning trade. But I didn't even expect market to go up until that high, because I was expecting that from maybe this sort of area I can see a possible reversal to the 15 minutes fair values around this area that it was creating. But I failed to see that it has actually created, that is the first time it created a bullish fair value on the 15 minutes, and this is the second time. Okay, like breakaway gap, and this is the fair value from where market can continue going higher. So when market has failed to create this one, I didn't realize that there is no fair value, but I was happy, guys. It's nearly $3,000 in every single account. So I really don't need to go all the way up there, because I was expecting these highs will be taken. As you can see, like all those highs are marked as my buy side liquidity over there. See, like every single high that I can see, I have marked as my buy side liquidity up until the all-time high, because that's what I'm expecting market will go until the all-time high. Okay, so I know that, but I didn't hold it up until that far, because whatever profit I'm getting, I'm happy with that. Yes, I can maximize more out of this, but I don't really need to do that, right? If I can do it most of the time, why do I need to like keep holding for? Think this way, guys. 3 a.m. I sat in, like before 3 a.m. I sat in front of my PC and I'm still in a trade. I'm not a day trader. Okay, I'm not a swing trader, I'm not a like day trader, I'm not any of those. I'm an intraday trader, or you can say I'm a scalper. This is most likely a scalping. People who trades in like, you know, like within 10, 15, 20 minutes you are getting $3,000, $2,000 worth of profit. Is it something realistic? How you are making it? Because you have the knowledge, you are utilizing that, for within a short moment you are getting your profit. But to do this, I had to look into the structure in 15 minutes time frame, in 1 hour time frame, and enter from a higher time frame as well than 1 minute. I cannot hold a 1 minute entry that I have taken from all the way somewhat around this area, even like inside of these wicks or this black candle area, something like here. Okay, like this is where I entered. Let me, yeah, so that is where I entered. Okay, this area, and now market is trading up until that far. How can I hold the whole time like that way? I might had to take some partials at the level. This was the most obvious for my silver bullet. I'm happy with that. Okay, I held until that fair values 25% level. I didn't even wait until the middle point, 25%. Why? I will show you that as well. You see this rejection? Can you mark the 25% with your eyes? From the high to the low, let's break it into 4 quadrants. Now a little bit here and there, but look at the 25%. That's exactly what. So this candle, when it started going higher, it gave me a profit around this level. I didn't even consider. You can see on the editing as well. Yeah, so that is where which is $802. Okay, like 8,002, something like that. 8,002 exactly at the 25%. Okay, this is where I exited out of my trade. I'm happy with that, guys, from here until there. Okay, I really don't worry about all those things, because there are news as well at 8:30 or 8:45, something like that. There was news at 10 a.m. all those. Now it's nearly, what is the time? I don't know why there is a reply mode. It's 10:42. There was the news during 10 as well. And look at the 9:30 move. How do I know like this move didn't stop me somewhere? There are so many other retracements as well. Like this was a huge retracement. Even though it was creating fair values around that area, around that high, it is still retraced all the way back to this area. So I don't know. I might have trailed it more higher and get stopped out somewhat. Like, since it didn't take any of these lows, still I'm in a trade. When it took this low, maybe this is where I got out from my trade, something like that. I really don't know. If I held it, I cannot expect me like to hold until that far and say, okay, I'm still in a trade and I'm profitable, I catch the whole move. It's not possible. No one can do that. Okay, no one can do that. So yeah, I think the silver bullet entry, it made sense to you guys. If it doesn't, then with time you will get this sort of entry. As I'm saying again, this is not the high probability entry. When market broke above that 15 minutes fair value, that became a high probability. Or since your 1 minute time frame is giving you this bias that the last fair value didn't show any sort of rejection, and it is already disrespecting all the bearish PDRS and respecting the bullish PDRS, that is where you could have got your better probability or high probability entry. Now if you don't know how to use the last fair value, skip that one. Try to learn the 15 minutes on the 15 minutes. You have to see a close above. Your 15 minutes candle closed above here, which is on this candle. See, this candle is 344. This candle started at 344, ended at 345. That means this is where your 15 minutes candle closed. Now look on this side. Okay, let me remove this mark. Look on that candle on the 15 minutes, and let me increase the opacity of the line. Why I'm doing this is because, see, still my line is on that candle that closed above the 15 minutes fair value, last fair value or the only fair value, however you look into it, it closed above that. This is the candle. Okay, The moment I move this on the very next candle, which is 345 candle, you will see this line is moving to this line. Why? Because this is the candle that started at 345, ended at 4 o'clock. Now the 4 o'clock, where is that? Again 359 candle up until this far. So what you are seeing here is market closed above at that level, market traded back on the 15 minutes as well, traded into the 50% of that inversion fair value, which is this fair value, which is the 15 minutes IFVG. From that it again went up and closed above. The very next candle, it should not reach for the middle point anymore if your bias and your analysis is working perfectly. From that market should go higher. So what you are expecting is, the first step is on the 15 minutes you want to see the close above. The second step is on the 15 minutes and on the 1 minute you want to see that it's respecting the middle point. Now what did I said about this sort of thing? See, this one came and closed a little lower than the 50%, but the immediate next candle, when it sent the price higher and closed above, what does it mean? It means that market is actually respecting that. This is just a mohawk. Now let me go to a 2 minutes time frame or even 3 minutes time frame. I believe there will be a wick only. See, on this candle on the 2 minutes there is a wick. So 1 minute is some, like, it's a very low time frame, right? So you cannot just judge something just looking into the 1 minute. That's why you need a supporting time frame as well. Now 2 minutes, maybe a lot of people might not have 2 minutes because you need a paid plan to have that. So let's show you on the 3 minutes. Same thing. On the 3 minutes, what happened? What you saw in 1 minute, exactly the same thing you are looking over here. The same candle came lower, immediate next candle went above and closed higher. The very next candle tap into the upper portion, it started going higher. Is it making sense over here? 3 minutes is 3 candle combining together. So what happened is, on the 3 minutes, in 1 minute whatever you are seeing, you have to increase it by, like, these 3 candles are creating that 3 minute candle. That's why you are seeing the exact same thing that you saw on the 1 minute. Why? See the time of that candle, it's 56 AM. On the 3 minutes, this candle's closing is where the 3 minute candle ended. So you're looking into something like this, okay? 3 minutes of increment. So 56, this is where 3 minute finished. Before that, 1, 2, these 3 candles combined. So let me mark this one and I will show you what I exactly mean. This candle is where 3 minute open. Let me mark it with something like what can I put? Let's put it like first partial. See that one? From there, now let me go back to 3 minutes and you will see that is the opening of that 3 minute candle. See, that is exactly from where 3 minute candle started. So 1 minute and 3 minute, it represents each other very how it called, in a very synchronized way. Okay, if this 1 minute candle, if it happened on the very next one, okay, like the mohawk, or where is it, come on, don't go too far. If this mohawk, okay, like, forget about mohawk, the fake break of the middle point happened on this candle or on this candle, then you would see a wick over there rather than a body, huge body on the 3 minute, because again this is where the 3 minute is ending. 1, 2, 3, these 3. Why this one is important? Look at the opening of this candle, it's 56. So from 56, 57, 58, oh sorry, I'm saying it wrong, it's 54. So from 54 it's 1 candle, from 55 2 candle, which is 2 minutes, from 56, that is your 3 minute completed. This candle opening happened at 56, closed at 57. Very next candle started going higher again. So from here you are seeing another green candle that closed above. So which is that green? From this candle's opening up until this candle's closing. Okay, so on the 3 minutes you will see the next candle's body is up until that. For let me go back one last time, you will understand the whole thing. I hope. See that? Where is that thing and where is that thing? That is the body of your next 3-minute candle. Anyway, don't be too confused. Stay in 1 minute if you are willing to trade that one. But okay, if you are willing to trade that one, but if you see this sort of thing, first see like immediate rejection, it sent higher. This is something you are looking into as a fake breakout, as simple as that. Once the 15-minute candles closed above, the very next candle, this retest is your entry. You got 2 minutes to enter into a trade until market actually shoots higher. So whatever it is, that's how you can utilize a higher time frame fair value gap. Same thing, like if market broke above this, broke below this fair value, I would look for the next level of liquidity, and along with that the same thing, when market is breaking below this level on the 15 minutes level as well, I'm expecting a retracement up until the middle point, and then again market is coming lower to that fair value or below the fair value, then it is giving me an entry from this area. And this time I'm expecting market will not revisit that 50% level one more time before going lower. If my draw on liquidity or my assumption is correct, market will give you a very good move from there. Okay, and this fair value will act as a inversion fair value gap. Same thing happened in 1 minute, but in 1 minute, as I said, you can skip all those things. Why? Because you are looking into the exact same time frame. If it can reject from the 50%, it's okay. If it cannot reject from the 50%, if it does not even reach to the 50%, it's okay, because you are looking into the same time frame and comparing the breakout here. Okay, this is something you have to understand. This candle came, closed at the top, this candle broke out and closed above the very next candle, so it has enough time to make a fake breakout. It didn't do that. Okay, this is 1 minute, but this is all 15 minutes. So if you look into the 15 minutes, this is even you can enter here. Okay, on the after the 15 minutes close above the very next candle, you can look for an entry as well. But why I'm not suggesting this candle or the very next candle is because same thing, guys. If this is a fake breakout, market will tell you with its next move. When this candle revisited that CE and exited out of that area and closed above the fair value, it's telling that okay, this is not something fake, I'm not willing to go lower anymore. Why I'm saying this? Okay, let's zoom into the chart one more time, and let me just minimize this. You see, above this area I had this order block as well, right? Just put the min threshold so that you guys can okay, let me remove every drawing and mark the order block. The first candle when it traded, this was your order block level and that was your min threshold. So it has came very close to your min threshold and it has traded order block. Okay, so after here market could completely start to go lower, since there is nothing, no fair value, nothing that can stop the market from going lower unless that a small little volume imbalance, right? On the other hand, is this a valid area for market to reverse? Yes, it is a valid area. It has fair value gap on the move. So first move, when that move happened, above the fair value when market closed, look here, there is not a single fair value gap, but you have a valid area for the market to reach or retrace. It is respecting those levels, right? Nobody yet closed above the order block level or at the min threshold, nothing. But the second candle when it came lower, revisited that area and respected that, closed above again. This time market also traded the order block. Now you know that this is not a fake breakout. Two candles already outside of that. This is not a fake breakout. On the other hand, look how strong your buy side liquidities are. This is literally relative equal highs over here sitting. Okay, these are the highs that you can see over there. It's relative equal highs, even if you mark this one as well, because that's a higher time frame swing high. You have 3 levels of buy side liquidity sitting very close to that level, and market has already disrespected 2 levels of defense over here. This was a fair value, and that was supposed to act as a breakaway gap that should send price lower and take the sell side, which first time it did, took lower, send lower, took the sell side. Now when it broke above, it should act as a breakaway gap. That's exactly what happened. Sorry, it should act as the inversion fair value gap, and that's exactly what these two candles are telling you. And the very next candle just tapped here, immediately went higher and took all these liquidities. Now during this area, I was not too sure, or I was not willing to wait and see like if market can break above this fair value and then, you know, come back again or not. But if I just waited a few minutes more, maybe I could have caught that entire move as well. But it is what it is. I'm happy with what I got. You saw me, like, saw my videos, how many days or how many trades that I'm trading and making a shit ton of money out of this. So I really don't need to be greedy and keep holding my position up until like 6 a.m. or 6:30, 7:30 a.m. Okay, that's something I don't really like to do. If I don't find anything during my silver bullet, I will look maximum from the 6 a.m. to 7:30 a.m. move. That is it. I'm not trading anymore after that, because I don't trade the AM PM session. I don't look for anything after that, because during this moment market usually creates a high or a low. Okay, like a swing high or a swing low, and the first 8:30, see that swing high was created inside, even the high was created over there. See, I just draw it in front of you. I didn't even look into the chart anymore. But 6 a.m. into 7:30 a.m. market created a swing low and a swing high. Just look properly. That's a clean swing high over there. That's a clean swing low over there. So this sell side and that buy side is important for the very next 90-minute cycle, which is what, like 7:30. Okay, I'm looking into, I moved it until 9, so 7:30. Okay, this area, the buy side and sell side, market will around up until 9:30. In this 90-minute cycle, market will take one of those liquidities, then give you the proper move again, and this is the manipulation that you are looking for. Let's see what happened exactly. Okay, so this is the current price action. Market has taken the buy side, retested back inside of that area. It created that propulsion block with the order block, and now it continued higher. So the 15 minutes, it didn't do a lot of manipulation. It has done a very little with those wicks, so that people cannot enter into a trade during that moment. Okay, so first went higher, then came lower, took some liquidity, traded back inside of that range, found the support, it went higher one more time. But why I said that liquidity, most of the time you will see, like during the, when the bullishness is fading up or fading out, what you will see is market usually, even like from the 7:30, the next one is up until 9 o'clock. You see this, there will be a high and low as well that market will take the liquidity from, then continue higher. Now I don't, okay, so that was the swing low as well inside that market took the liquidity. But as I said, the manipulation when this week happened, let's see that area in 1 minute, how big of the move. See, like after seeing all this huge move, a very few people got this, like saw this as a possible entry. Very few people saw this as a possible entry, because it was very quick to go lower and take all these liquidities. but usually that is what market does. When there is something that they have to achieve or reach very quickly, they will first aggressively give you a manipulation inside of that. Okay, like look, this is the accumulation, manipulation, distribution. Now after the distribution, what you are expecting, market will retest back into your OTC or premium and discount array. Look here, that is a premium area that market retested this high. Okay, let me give you this as well. Okay, since it happened in front of us and we can see what happened in the market. Usually what people go, why I said that is the manipulation on the during the market open, because you see that mostly it retested back inside of that area. Now if you have watched my dealing runs video, what did I said about this high? This high is a very important high, right? You see it's trading the premium inside of the most premium area. Like I don't know how to explain that part. This is even above your OTC, so that high is trading into that first fair value, which was supposed to act as a breakaway gap, but that week actually traded back into that. Okay, this fair value, what did I said, even if it's a small one, I don't care, size I don't care. Okay, as long as it's a fair value, market can reach there, market can fall. Now when that high formed, some people might have entered into a short trade, maybe from even here. Okay, maybe from this level. Why I'm marking that is because of that fair value, because inside of my OTC, even if I was in a trade, I might have entered from here, putting my stop loss at that high, the third candle's high. Now in the, okay, it actually did not even stop me there. So as I said, I'm still in a trade for targeting that low because it's a dealing range. But if you have watched the video from my OTC or my channel, what did I said, that if market fails to take that high, take that low, and if market takes that high, what is the direction that you are looking into right now? Sell side or buy side? You're looking into a buy side direction. At the same time, you see it's coming out of a bullish fair value. It will give you a 2022 IT model. Have you found that right here? Let me remove this drawing and let me draw it with this. Have you found your liquidity grab right here? Market has grabbed the liquidity, market has traded inside of a fair value. Now if you didn't utilize the fair value, then you can utilize this break of a structure. Where did market revisited or retested? Close proximity you can call, and also I'm not using the borders. If I use the border, you will see that it just tapped into that area. Okay, now this is the retracement area that I usually mark. You saw me marking on my entry, so if I keep that aside, this is the area where market will retrace and then it will go higher. Now if there is no fair value, you didn't take entry, but you know the direction right now. That high was taken at that level, or inside of that retracement zone you have another fair value. So if I was not explaining all those things, this is where I might have entered into a trade. Let's see what market, like we already I think know, but I didn't even realize it was doing this. Okay, I'm sorry guys, but it's I'm just doing based on the analysis, so I didn't even know it has done that. Okay, now why this is my stop loss? First of all, it's coming out of my retracement area, that's the swing low, that is one thing. Another thing is the fair value that I'm using for this entry. Where is the third candle's low? That's the third candle's low, and below that price has nothing to do. Okay, what did I said about the 1 to 3 move? Market has given a buy side, market has given a sell side, market has given another buy side. So from that low, that high, this low, this is how far market is balanced. So market does not need to, like, this is the balanced price. Above that it's not completely balanced, so market revisited that area, then it went higher. That's why my retracement zone is from that wick to the body. Okay, And now the dealing range, what did I say? Let's say I took the loss over here, whatever the loss was, I took it, okay, by taking a sell short from any of these levels, from this fair value. Even if I put my, like, should not be there, but even if I put it here, I took a 30 handle loss, I took a 41 handle, or if I target 1 to 2 or something, I still took 39 handles. I mitigated the loss, I got the profit. I hope you are getting this point. Now let me read some of the comments. Michelle bro, how are you? Hardik bro, I mean check the browser settings. Brother, I know what you are saying, but this is something like, whatever you are saying, look here, okay, when I'm zooming out of my browser, or this is 25% that you are saying. Now if I hold it and send it back to the 100%, this is the 100%. I know what you said by zoom out. As I'm saying, I have a huge monitor, so based on the monitor size, it's looking very huge in my eyes, but if you're looking into a smaller monitor than 32-inch, it will look very small to you, because every information that I'm seeing in my chart, it's fitting that information in a 15-inch or even lower monitor size, okay. Like if the screen size is 15-inch, or even let's say 21-inch that you have, or maybe 27, doesn't matter, as long as it's not bigger or the same size, it will shrink all the information into that as well, okay. So I think that is the reason you might be seeing the candles smaller. But if that is the case, I think you can zoom in a little bit on your chart as well. And that's the reason actually I was actually doing something before, like my OB. Okay, let me do that one more time. In if I do it, okay, this is bad, so I will just put it on my end, and I will try to fix the thing by reducing my tabs and other step, okay. Like whatever the tabs I have, I will reduce it and try to give you guys the chart only, so that it can be a better, okay. I don't know if that will be a helpful thing or not. I'm fixing the level, so there will be no lower borders or upper borders. It will only be the chart on the screen. So from now on, whatever video I'll be recording, you will not be able to see if I'm on the real account or on the fake account, like the paper trading, like I'm sitting right now, okay. So brother, I will definitely work hard. I think you should, brother. Everyone should. Is it better what I did? Because I have removed all the borders, the tabs that it was showing, like these unnecessary area, and just kept the chart on the screen. So I hope it's now better, okay. So yeah, like let me know if it's better in your eyes or not, because it is what it is. How come both of them have, okay, let me move it a little. Nothing over here actually. So whatever market is, it's again at the all-time high or what? Let me check. I don't know. No, it's actually has a pretty good amount of room to go, but for that, where is the first fair value? I'm just drawing, you guys know what I draw. So 15 minutes first fair value, I want to see market is breaking above that, so I will just write it bag. Other than that, if market can break above that, I can see these relative equal highs at the target for the market, if not the all-time high. Because yeah, it is what it is. It's going for the all-time high, but it's better if it doesn't go today, because then I will have more of my chart area to work on, and the target will be even better. Now I have seen a retracement into the bullish PDRA, but in 15 minutes market failed to create anything. Now let's see how this one is doing. I mean, this one will not be a valid one, to be honest. It's not a very high probability, this one. If market can close above, it's not a very high probability anymore, because this candle ruined it all. If it could close above with that candle, or at least it could close inside of that area instead of a black candle, this could still work better than any other thing. But for now, this is not a high probability anymore, because that candle cannot let the market give a displacement with a fair value around that area. If that could happen, this could act as a very good area to look for a buy long above that fair value. But as I said, still, as long as it's respecting any of these, it's good. Okay, the moment it disrespect that, I will wait until it reaches to a higher time frame point of interest on the retracement, because there is not a single bullish fair value that market has created, like a good fair value that market has created, except for this little one. Okay, but it's a 15 minutes fair value that size as this one. I will keep an eye, but still, let's see what market does above that area. Okay, and I think the chart looks better now. Is it? 4 hours OB, on hours OB, on hour fair value. Honestly, I took the same trade like you, London Silver Bullet. I think don't need MSS with swing. IFVG tells me to entry at the ST Vico. Yeah, brother, maybe you don't really need it, but what I said is, for the people who doesn't have enough experience, you have been, if I'm not wrong, you have been trying it or doing it for a good amount of time. That's the reason. Hey Faisal brother, how are you? Have you received your payment, the withdrawal? And congratulations if you have received it for the. Okay guys, Shiva here is a guy who's working really hard. And for Shiva, Muhammad Ali Khan, his nickname is Faisal. So Faisal here is a living example on my channel who can inspire a lot of people. Now, I hope Faisal will not mind sharing this, but before he passed his challenge, the one he is doing, he tried 20 times and he failed the challenge 20 times, guys. He didn't give it up. He didn't give up on his tries. And the moment he completed his challenge, he continued, continuously kept learning, kept improving, right? So the moment he passed the challenge, from that account, he is now actually requesting a payout as well. And I hope by now you have received your. No, brother. Okay. So let me actually get the things together. Brother, got it again. Sent a payout request for 2000. So after getting the first payout, you again sent a request of $2,000. So that means I think you have recovered all of your investments and you have gained some money as well, because for 20 challenges, if you haven't done anything else during those moments, then it will cost you around $1,000. So with the first payout you actually got all your investment back, and now you are actually paying yourself out of those things. Excellent, brother. I'm all because of you and your. No. I said you before as well, brother. This is not because of me. This is because you never gave up, bro. Think this way. If you have given up after maybe 2-3 tries or something, you would never meet me, you would never get the chance to know about this channel, or I don't know, like whatever information helped you the most. I really don't know how I helped you, but since you are saying okay, thank you, I'm willing to take that part. It makes me feel good. So thank you for giving me some of the credit, but it's your credit that you never given up on your dream. Okay, you continued to practice, you worked hard on your weaknesses, that's why you saw that. Okay, I know few other people as well who after completing the challenge sent me a thank you, but after that I saw him a very less time in my stream. I'm not willing to say the name over here because that guy is he's a very good person. He might get hurt if he is still watching now. But what is the result behind that? He has completed his channel challenge maybe uh, 5 months 4 months ago. I really don't know like how long it was, but couple of months already. Okay, just think this way. He sent me thanks, he sent me the certificate, lot of other things. Thanks a lot for your help, your knowledge, it helped me, things like that. But after completing the challenge I never saw him, like maybe in I saw him once or twice. Now this is so many months already gone after completing the challenge. He still didn't manage to get a payout. Okay, even he is nowhere near to get a payout. I am thinking he might have already blown his account as well, because when like this is very bad. Bad means when people try to learn and earn, that is where they mess everything up. Okay, and after few days they will come back to even my channel and say like, you whatever you taught us, it doesn't work, it's this, it's that. Guys, you have to work hard to know what you are looking for. Here if you have, I don't know if Murad is still here or not. He's a older brother to me, but I should not, like in my culture we don't say their name or our elders name. We call them with some other like based on the relations, like brother means bhaiya in our language, so we call them vai or something, like vai is brother. So I don't know if Murad is here or not. He has been practicing this. He said like when I first started my channel, and in the very first day he texted me on my Facebook. He said like, I will be the best student of yours, I can promise you that. And trust me guys, there is not a single day I didn't receive a message from him regarding a certain thing, up until when he had a very good grasp on the things that I shared already. I gave him the ICT playlist when I uploaded the video, like if you are new to the ICT thing, you can start with this sort of videos. When I shared that playlist, he messaged me again like, should I do that, or I wait for your next video, things like that. I said no, you do not wait until I upload a video. If you find a better place to learn from, just start learning from there. You can still ask me for guidance or something. If I have anything to share with you, I can share with you. Now as I said in my community post, that if you have watched and practiced that thing, like the accumulation, manipulation, the dealing range thing, so far whatever I just showed you, everything has worked perfectly. Even here as well, what did I said about this high? It's a very important high. The moment market has taken this liquidity, no longer market, even if there was no fair value, let's say there is no fair value like this, when market has taken that liquidity, you are no longer looking for that low as your target. Cause when market did this accumulation, manipulation, or even here, from here, since the original accumulation started from here, this is your accumulation, that is your manipulation. Inside of that you have your reaccumulation, remanipulation, you can call it this way, or this is the second stage of accumulation and second stage of manipulation. Once the manipulation reached to a level, I don't know what level I have over there, but once that happened, market did what? Just look, immediately it came lower and broke below up until that manipulation leg. This is the sell side liquidity that was engineered. When that happened, the one single move took all the sell side liquidities. In my channel you will see me explaining the exact same thing. Now if you have not practiced it, you might have looked into an entry from here, you might have looked into an entry from here. Why you have to rush everything? Every fair value is not for trading. Now market is bullish for the whole day, so the whole thing that I'm seeing here, I'm counting this move as a manipulation. Because of the experience I can avoid this entry, but still, since I'm saying like you don't have, let's say a lot of people don't have enough experience, so they will take the short. Okay, there is nothing wrong with taking that short because you can expect that accumulation, manipulation, distribution. Now this low is the target, but if you have practiced enough, you know when to look for the buy side. The moment market broke or took that liquidity, this is where in my video I said you have to look for the buy side. And during that specific moment, look here as well, market has done another accumulation, inside, manipulation, distribution to the upper portion. So this is also a thing that telling you that market is willing. Why I'm saying this is the manipulation? Okay, this might not be the manipulation, then this is the manipulation, this is the distribution. Again it went higher, took that liquidity. Why this is the manipulation? Because when that manipulation first happened, the very next move took the buy side as well inside of that short term accumulation phase, right? That was the high of that accumulation phase. Look at all the bodies or wicks, it's trading literally here. Okay, now this is a 1 minute time frame, right? So when market took the buy side, sorry, it first took the sell side, immediately it took the buy side. It didn't create any other swings or anything inside of that range. It came again, retracement, took the liquidity, now it's giving you the buy side delivery. By the meantime it is taking you this liquidity as well, the very important area. So now you know that market is not bearish, market is bullish. This move happened because of the 9:30 opening, and there was a news as well, if I'm not wrong, at 10 or something there was a news, or that news did actually nothing at all to the market. Let me check actually, I forgot, because I really don't need to keep in mind what sort of news I have. Okay, like seriously, I really, this is Fed chairperson, Fed chair Powell speaks or something. It was a red folder news, but it did nothing to that. FOMC member at 11:30. Let's see. Okay, so I will wait for that. That orange folder will do more damage than the Fed chair Powell. Fed is also important, but why I don't need to look into the news? Because of the session that I trade. Okay, London session is the session I trade. There is no news during the London session, nothing at all, and there will never be a news during the London session. So that's why I choose that one. Now people have so many, like misconception regarding the news. Only the big three is what you should not trade before or at the time. Big three is CPI, FOMC and NFP. This is it. Now you can add PMI as well if you want, but I don't want to add PMI. These are the three that you should not trade before or at the moment, like during the news time. You can trade after. NFP is non-farm payroll. You see Friday we have a NFP here, non-farm. You don't want to trade before that news. 8:30, good, everything is happening before 8:30. So now you can trade the AM session and PM session because there is nothing after 8:30. Also after this Sunday, keep this in mind as well, the daylight saving is shifting, so when you come here at -5, if you don't see your New York is here at -5, set it to -4, or wherever you see the New York is written at -4, you will see the New York is coming here. So after the Sunday, okay, so keep that in mind as well. And I have to keep that in mind as well. I don't know if I will keep it. Okay, I got an idea. Just a second, guys. Everyone, you might forget because it gonna happen on Sunday, and since Saturday Sunday market is closed, you might forget. So go to your chart, take a text from here. Okay, this is the anchor text. Select that one right here. Daylight and NY. Just keep a note. Okay, what this anchor text will do is, even if you move your chart, it will stay in that position. So if you don't want to be want this to be here, just put it here as well. You can put it at the corner, and maybe something that actually catch your eye. I don't know, like if that whatever, like maybe the white or something like this, daylight at NY. Just save it this way, so that if you look here, you can just click here and change that one. So this is a reminder. This is anchor text. It will be there for the rest of the life if you don't remove it. Okay, so at this corner feels good. Now let me get back to my chart, like the other chart, so that I can continue doing this. So other than that, you can trade any other news, okay, as long as you know what you are doing. If you don't know, wait until the news is done, and then you can check it. So now if you are for the first time seeing this is the website forexfactory.com/calendar. if you go to this one, I will put the link in your description as well, so that you can keep it as a bookmark or whatever. So this is the website. We look for our news, and if you click on this, okay, like let me zoom in. If you click on this filter, you can just filter out, keep the black folder, because it will give you the holidays and is non-economic. You see, like non-economic is bank holidays and this sort of thing, like the daylight saving changes, things like that. This is why I have this one. Yellow folder, I really don't need that one. Red and orange is what you can look into. Okay, orange has medium impact, but red is very important. And then whatever pair you trade, for example, if you are doing this NQ or ES or anything that is related to US dollar, you can keep the US dollar. If you are trading forex like euro, GBP, you can select that as well. Okay, so these are the thing you can look into, and this left it as it is. Don't worry about any other inflation, employment, central bank, bond growth, whatever it is. Keep all of them ticked. Just don't keep everything ticked over here if you are not using, because if you do that, now look what's happening. How many yellow, red is also appearing inside of that. Okay, this Sunday US, okay, US dollar and CAD daylight shift, it's okay. There will be a daylight shift on London session as well. I don't know how that will affect my I don't know how that will affect my trading time, but yeah, I mean on the April or something there is this. Okay, see, like all day JPY bank holiday. I don't trade JPY, so this sort of information can give me, like, create confusion, and I don't know which one is USD among all this, right? This is the only USD. So on this day I don't have too much to worry about. And then there is something on the next day, 2 AM. See, GBP CPI at 2 AM. I don't trade forex during that time, so I don't really need that. So keep it clean. Okay, don't go into something that may create confusion. Only USD pair is what I trade. Keep that one. So this is the website. Try to filter it out. You don't even need to log in or do something. If you filter it out and save it, they can somehow memorize it, okay, with the cookies or whatever, they can memorize it. So you don't really need to even create an account, but if you want, you can do that too. Yeah, so this thing will save you from losing or blowing your account so many times. Because see that 11:30, look at the move. What did I said? Like, even this FOMC orange folder news will be more, I'll just put like news. This time, and this specific orange folder one is more powerful than the red folder you saw. Okay, Fed Powell is speaking. Look, Fed Powell at 10 a.m. did actually nothing. I don't know, like, where is the 10 a.m.? Maybe somewhere here? No, even after. This is the 10 a.m. move. Okay, that was the red folder candle, and this is the orange folder candles move that you are seeing. So yeah, I mean, that guy is a SOB. I wish nothing like that comes up anytime soon after he dies, because every time this FOMC member speaks, now market fucked up all this time. Okay, unemployment claim at 8:30, Fed Chair Powell testifies at 10 a.m. nothing happened. Orange folder speaks, the market has now volatility. Yeah, even though that is happening, it's happening from a very good point of interest. See that fair value that I marked, and I said like I would look into that fair value. Now market has reached there, and now it's giving you the direction. So let me read some comments one more time from where I missed. Don't get hurt, guys. I am not very good at reading comments. So when I start to talk, I talk a lot. So lot of things I miss. So let me see. I will definitely work hard. Okay, I have already read the Shiva's comment. Muhammad Ali, no brother, you can share. Okay, all because of him. Okay, I have already said that. Shiva congratulated Ali. That's a very good thing. You guys can, I'll try very soon. Like, let me actually give me some time to give you guys what I want to give first, and then I will try to create a Discord channel from where you guys can talk with each other or share your ideas regarding some entries or whatever. Like, you guys can interact with each other after that. Like, just give me some time. By the meantime, let some other people know about the channel and stuffs like that, so that more people can get benefited from it. Ali Muhammad Ali Khan, that's really inspiring. I hope so. And yes brother, got my investment and more. As I said, excellent. Now you try to fry your fish with the fish oil. I hope you got my point. I already explained it in the Facebook chat with you. So it was, have you taken another challenge, or you just let it continue with this one? Like, if I was at this stage, this is not a financial advice. I'm not anywhere, like I'm not a financial advisor anywhere certified or anything. So just take it as what I did, as a story, not as a advice. So when I got my first payout with some profit, like my investment back and my time, I paid myself a little bit of amount for my time as well. Okay, like the time I have spent on the chart, I paid myself a little bit as well. So once I found that one, I bought a 100k challenge. Once I completed the 100k challenge, I withdraw the money from the 100k. With the profit, I bought 150k. Once I completed that, withdraw the money. Now I have another 100k in line, like already complete account, but I'm still holding. If I can see, like they're calling me for the live funded account, that will give me like 1 live and 3 funded, right? So I'm doing it that way. And about the 75k account from Apex that I didn't continue trading, and I shared on my YouTube channel, like after completing that account. I'm not willing to utilize anytime soon. Okay, like this one, the 75k apex challenge that I completed in 3 days and live streamed most of the entries as well, because in this apex thing I have to pay $100 per month for the top for the TraderPath data. Okay, like the chart or the data that I'm getting from TraderPath, I have to pay $100 a month. So if I don't trade on that account properly, since I already have too many with my top step, this will be a huge problem for me. And if I want to, like, I don't have time to trade this one. How I can trade is I have to buy a copy trader and link all the account together inside of that copy trader, then I can trade. But in that case, their way of counting the max loss limit, it will not match with my top step, so there will be a high probability that I'm going to blow that account very soon, because as I said, they count it based on the unrealized PNL, the highest. Let's say like market went up until that far, so from wherever, like if my entry is here, market went until that far, if I didn't close my position or take the profit here, then when market came lower, let's say it's stopped me, like it has stopped me out somewhere around this area, my max loss limit is calculated based on what is the highest profit I saw during the move. Even if I got stopped out here at break even or even in a small profit, still it is a loss for me. So that way it's a very hectic thing. I have already tried that part. I'm not happy with their process, but it is what it is. It's their business plan. Hey Virender brother, you are a bit late, but welcome. Okay, welcome. You are a bit late. I have explained a lot of things. If you get time, I think it will be valuable or helpful, but if not, you can ignore the first part. So this breakaway gap, market needs to break, but during that moment, since I'm on a paper trading, I want to see how this fair value is doing. Okay, the last fair value. If market can break through that fair value, I will still try to utilize that one. So what I can do actually is, oh no, the buy stop actually doesn't work like that. I thought buy stop will trigger when market goes and close above that, but it actually does not. So it will be triggered when market actually reaches here. So that's the thing that I don't want to utilize. Let's see, like the entry, if I was trading in my account, I would look at that high. Like once market breaks above that, I have buy side liquidity sitting above. The same thing, guys. On the 15 minutes, I want to see it's broken on 15 minutes. In 1 minute, I want to see when it was broken, market is coming maximum to the CE, going back again on the top, coming on the top, then giving me the setup. Like this is the entry. Okay, this is where I would enter and stop loss below this low. That's it. But because I'm on the paper trading, I want to test this. Okay, like when market is this crazy bullish, if we can utilize it for longer period of time or not. First it needs to break above that and close above that. Okay, I'm just keeping it. Okay, I didn't mean to do that. I'm keeping it here. Let's see, maybe just a tick. Let me remove this one, although that was working good, but mostly this fair value is the one that's holding the price. So rather than looking into that already happened or delivered multiple times, I will look into this fair value if market can break above and close above. It could have been better if this candle can close above, because it's not too many candles that's trying to break above that area, so that will determine that it's not finding too much of resistance, but still it didn't do that. So I don't think it's a very high probability entry, and also the 15 minutes is sitting right above, but because of the market tendency or trend to go higher, I want to see that this candle is closing above the fair value, and the very next candle is coming back on the fair value and giving me an entry. So okay, buy a stop. Why? Okay, the price is actually below, so I have to market execute that. Maybe buy limit now. Okay, I put it too early, but it is what it is. Let's see, because this is a paper trading, guys. Do not try to copy, and the stop loss should be here, the candle that first closed inside of that fair value. I'm putting below that. It still failed to close above, but this sort of close I have already anticipated before. So let's see. Ganesh Kartik brother, hi bro, are you from bro, you have some serious issue. Ganesh Kartik brother, are you from, what do you mean are you from? I know what you are trying to say over here, but I know, like, I'm not from India, bro. Now you have asked me this question 3 times maybe. You are excellent, could you do more of why you enter a trade and time please? Okay, so trade and time please. Okay, I didn't get the point, but anyway, if you're talking about the silver bullet Julie that I have explained during the earlier session, which is all the way back here, then I have already explained the whole thing. Just this part, it's coming out of a 15 minutes breakaway gap like this way. It has taken the Asia sell side, so the expectation for me was the buy side, and it has created so many relative equals around that area. So that is the most obvious target for the market. So for that reason, when the silver bullet started, I waited first for the price to take the sell side liquidity. Once that happened, I took a aggressive entry from this area, this fair value, because it has created multiple fair values. This one should not be traded, or if it's traded, still there will be some portion open, and this is the fair value I should enter from. So this is where I entered. But if you know, then you could have entered once price broke above that, came back again on top of that fair value. That was your entry, because this should act as a inversion fair value gap. And if you missed that one, then the 15 minutes bearish fair value was sitting right around, somewhat around this area. Okay, so it was looking something like this. So when market was trading and rejecting from the 50% here, because on 15 minutes it closed. Okay, let me go back again. Look guys, I'm too good with my drawing. See, without even drawing from the 15 minutes chart, I managed to do it. So that fair value on 15 minutes, when it was broken with that candle, we expect to see a rejection from the CE of this candle. So the midline is your CE, or the consequent encouragement. When market rejected from there and again closed above, on the 1 minute it looked something like this. Okay, so this candle came, revisited that area, again closed above, and this is where you could utilize this fair value stop as your entry until it reaches the buy side liquidity, which was around this area. If you are taking more than one position, you can hold it, because this was the Asia buy side, and along with that you had the 15 minutes relative equal high sitting right around this area. And if market is willing to go lower, there was a bearish fair value as well around that on the 15 minutes time frame. So yeah, I mean, if you have more than one position, you could close some partial at that level. After that buy side liquidity is taken, and you can hold the rest of the position, keeping either your stop loss at break even or even in some profit as well, because in this case it has created two fair value, so one should act as a breakaway gap, another should act as a inversion fair value, but you had very less chance to put it here because of that small little volume imbalance. So the best area is here. Okay, I mean at your break even is the best area. Market went above, closed above the 15 minutes. In this case it didn't even retested the area anymore because of that 1 minute fair value was sitting above. Market just traded until that far and continued higher. So along with these levels, sometimes I like to trail my stop loss if I'm holding a position. Okay, up until I see like here is a possible area that I might have trailed. Market came until this part. Why I'm saying here, because that fair value gap candles third, and also this propulsion block or order block, however you count it, the mean threshold was covered by that low. Okay, so when there is a propulsion block, or if you count it as a order block, the mean threshold was covered by that low, so I'm happy to put it here. Okay, if market can come and stop me out there, I will not be too judgmental about that, because market can now go lower and revisit all these inefficiencies that it has left below. Okay, so yeah, I mean until I'm stopped out, I'm looking into the structures like that way. For example, when market went above this area and took the liquidity and created a fair value inside of that range, which is here, I would move my stop loss below that fair value candle's low. Again, it's covering that order block or proportion block. When again market went above that high and created a fair value around that area with that volume imbalance as well, I would now consider moving my stop loss below that candle, because I have multiple fair values. So this should act as a breakaway gap, this should act as the entry gap. Along with that, I have that volume imbalance. Market tapped into the volume imbalance, continue higher. So this is how I trail my stop loss. Okay, like calculate up until this far, I'm seeing nothing stopped me out. So when I moved here, market created fair value, maybe even the fair value candles low, where is the propulsion block's mean threshold is holding, maybe below that, since it's covering. So when market give me this retracement, this is where I might have got my stop loss in a profit, like all the way from here. So yeah, if I trail like that way. Okay, so I hope that answers your question over there. Now if you're talking about this entry, I've already said like it's just to check if the market what it calls, like the trend works in my favor or not. It didn't work in my favor yet, but until I'm stopped out, I'm not willing to call it a trade, but it's coming out of a very valid point. So if I'm looking for a buy long entry, above this fair value will be the place where I'm looking for a buy long entry. This one is just for a test. Since you joined little late or something, this entry might not make sense to you, but I'm just checking like during the trend, like bullish trend, what market has done the whole day, if this fair value works or not. For example, it still, this fair value is a valid fair value for me. Why? Because that is the candle that created. Now there is another fair value sitting right below that area. Now this time market has choose to come until this far. Now if market goes lower and stops me out, then this will be the fair value I will try to take a short from until the nearest lows. Okay, I'm not holding all the way back to the sell side liquidity wherever it has created, just the nearest lows, like this low. That will be good enough, but for that first market needs to stop me out. This is one PDRA of that move, this is the second PDRA, and this huge candle is my third PDRA, and in this case it will act as a order block if I'm right about the whole thing. Okay, why it will act as a order block? It has taken some liquidity from its left, it has traded into a fair value gap. When it broke above, it has created a fair value at the range as well. So this is a order block, high probability. I'm even not saying this is a low probability based on the 1 minute's price action. So this order block's job will be done if market can take that liquidity one more time. Okay, because from that high it revisited the order block, and that is the initial target. and based on the price action around that level we can consider the rest. But we are just speculating here, okay, like this is expectation. Market will deliver it or not, that's up to the market, okay. This is the expectation I'm saying, okay. And yeah, like this is a paper trading, so please do not try to copy me. A lot of things that I will do will not make sense to a lot of guys, okay. And I will say that as well beforehand, because the entry it gave me, this was the retestment, so I'm happy with that entry. Still I'm happy until it hits my stop loss. Now this stop loss, as I'm saying, I didn't put here based on this fair value. I put here because this is the candle that first went inside of that fair value and closed inside. From there market is going higher, that's why. Okay, let me come back all the way back to my silver bullet. You see that first fair value, this is the candle that first closed here. So even if I'm taking the entry from that, I'm still putting it here, nothing else, not based on there is two fair value, this and that, nothing here, okay. Still if I enter from here, this is my stop loss. Now there is a volume imbalance as well, but yeah, there are so many other confluences around that area. That's the reason I'm not willing to like go any lower or cover this, because I was too confident about this. I'm seeing this for very long time. Now what are the confluence? If you look here, this specific area, okay, this specific, forget about this 15 minutes, let me remove this one as well. These two up close candle is your in 1 minute based on just your 1 minute price action. Remove all of them from the left. These two candles are the highest probability breaker block. These two candles, highest probability. Why? Because when the same move takes liquidity from multiple levels or even a higher time frame point of interest, or what it calls the higher time frame liquidity level, if it can take the same move, when market goes and closes above that, this becomes, remember what I said, goes and closes above that, this is where market went and closed above. Look at all those retracements. So you don't really need that 15 minutes fair value anymore. If you knew the breaker block theory, then this is where you might have, like every time it's coming here, this is a chance of entering into a trade. As simple as that. Along with that, inside of that breaker, what makes it more high probability? If there is a fair value aligning with that breaker. Look at that small little fair value, okay. As I explained this already, that if the area makes sense, then I don't look into a fair value with its size, a small, big, doesn't matter. If the area makes sense, that will happen. And as I showed you earlier, that even if the move happened, I was drawing this, even if market was trading lower, I was expecting a fair value at that area, and that's what I wrote even before that happened, okay. Once it revisited, look, I have nothing else drawn over there. I don't know if you guys can see it or not, but now let me zoom in here and let me show you from this area. See, here I have no fair value marked, nothing marked. Only thing I marked is the 15 minutes inversion. Only thing I marked is that inside of that range. When that fair value, I had so many, like here, even below that, I had even two more fair values. I marked nothing. Now I already shared the move that I was expecting before that happened. So here, okay, look where the candle is, look at the time over here. It's still 7 seconds left for that candle closing. I'm calling the move earlier because accumulation, I'm expecting a manipulation inside of this fair value, then I'm expecting the distribution towards the upside before that. This is my expectation, okay. This is the experience over the time sitting into the chart. I'm expecting this. That's why I said, like, keep practicing those three things: dealing range type 1, type 2, and the silver bullet. If you keep practicing, the day it's not delivering towards the direction you're expecting, align that day with your higher time frame bias, for example your daily bias or weekly bias. let's say your weekly bias is bullish and you are expecting a sell short on that day, what is the high probability? If market can give you a sell short setup or a setup like this on the buy long side, that is still a silver bullet entry, guys. The strategy I showed over there is to just simplify things. If you don't get that specific thing, don't take that entry, don't force the market. Every day will not be a day for trading. Even I'm doing it wrong. Although even after all these years, I'm sitting in front of the chart every single day. It's not like that. Just because I trade in 1 minute chart, I'm looking into the setup every single day. Just because I have enough experience or good enough experience that I will say, I'm sitting into the chart, I'm making the profit. Some days I'm losing as well. Like yesterday, as I said, in my community, I have already shared. If you have missed that one, didn't I share in my community? Like, new video coming out today. Yesterday was not a good yesterday I was not in a good mood to trade, but somehow I tried and took a loss of $740. I didn't trade anymore. That's why no video came yesterday. Also, I might come live today, but not sure about the live stream. So I share everything that I do. Now some people didn't find my stream 2 weeks ago valuable. You can fuck off. As simple as that. Don't waste your time over here, man. If you don't find something valuable, for example, I have written something. I'll show with you guys. Whatever is coming next, I'm just testing some people as well. Okay, see, as I said, that high is the target for the market. Now look, after doing this, where did it stop? Here. Now some people here, there is a fair value gap, but I'm seeing it still respecting this fair value. This is the mohawk I'm talking about on the lower time, or as you can see, like, forget about this. Okay, just think about the bullish PDRS. It's respecting that. That's good enough. I don't need to enter from here. Stop loss calculated, market reached until that high, calculated. Now I'm expecting that market will create a fair value up around this area. Now there is a fair value. So if market does not revisit this fair value and continues going higher, this is my retracement zone, because below that area it's completely filled up, it's completely balanced. Okay, why? You see the bullish move, bearish move, again bullish move. So 1 2 3 move happened up until that far, and those bodies, this is how far market is balanced. When market is retracing to that area, I don't want a very aggressive retracement, like a bearish fair value creating on the retracement move and then coming below that area. If it even comes below that area but creates no bearish fair value or takes very long time to come here, that is a good indication that market will continue higher from this fair value. Even if there is this 15 minutes fair value gap, my 1 minute is telling me everything. Okay, so $1,800 risk. Now I can mitigate that risk until this low, because I believe market will not come here before reaching to that point. Now again, I will keep it here just to see if it provides me 1 to 2 or not, nothing else. 1,800 risk, so I am willing to take a profit at $3,600 here. At this level I have nothing on the 1 minute, but let me check actually. Yeah, so I will at least target until this fair value, not even the swing high, guys, the fair value, the last fair value. Rather than this 15 minutes, I'm preferring this one based on the 1 minute fair value gap. If it can break above that 15 minutes, that is where I will be more than happy to see, like, market is coming back inside, revisiting or retesting that 50% level, then going higher. Now see, this is my retracement area. I want to see market how it retraced from there. Okay, what did I say? Below this it's balanced. Now I'm not done yet. Okay, just because it's giving me some rejection or reaction from this area, I'm not done with the retracement. Until it goes above, close above that, create new fair values, I cannot be too sure about the movement. Okay, So I cannot, just because I'm seeing this rejection, I cannot be too happy with that. Because it's coming out inside of a 15 minutes bearish fair value, higher time frame point of interest, it's respecting that. So what I want to see, yeah, so that's what I was saying, like I want to see a huge move that is creating fair values, new fair values. Only then I will be able to move my stop loss below that low. Before that, nothing is confirmed, nothing is safe. Also, it's 12 a.m. move. Okay, this is the 12 a.m. move, sorry, 12 p.m. move. So lunch hour started. Let's see how the market moves during the lunch hour. I hope that's making sense. Okay, so the whole move is looking something like this. This is your 1 up until that high, this is your 2, and when market went above that high, this is your 3 complete. So below this, in 1 minute time frame, this is all balanced. This is the balanced area. This is the imbalance or unbalanced, however you say it. That area is sitting there, so the retracement can happen up until the body of that balance area, the wick to the highest body. Market retrace there, market can now continue higher and create new 1 to 3 move over there. But for this 1 to 3, I needed to see some fair value gaps. This area sent price higher, it took this liquidity, it failed to create fair value. So as I said, I'm not still too hopeful to move my stop loss above that level. Okay, like even below this or below this. I want to see market is the high it has created. Okay, it's nothing over here. Either market is going above that high with the fair value, or market is creating bearish fair value at this candle's low level around this area. If that can happen, I can decide like where market is going. Up until then, I have nothing to read or nothing to say regarding the market. Okay, and the only reason I didn't close above this one, this is the most obvious target, since it's coming since it's sitting inside of a high time frame point of interest. But I'm not taking the profit here because I want to see if this is something that I'm trying to understand during a market move, nothing else. Okay, like I want to see if it's reaching the 1 to 2 or not. Now see, like it's creating bearish fair value. This is not something that's telling me that market is willing to continue higher straight away. So what gonna happen, market will come lower, take my liquidities or take my stop loss, things like that. But for that, what do I have as a resistance? This fair value. If market can close below this fair value, I will use this fair value as a sell short. The same thing that I did here, the same thing I will do there as well. So let me remove the retracement area. You see the common area is still holding and this candle still didn't close. So if it failed to create the fair value at that level, at this level, I'm still hopeful with my entry. Okay, at this level it has to create a fair value. So for now, I want to see market is breaking above this fair value and closing higher. If it fails to do that, then as I said, this one, both side. Okay, this is the bracket. If it can fail close above that one, then I can move my stop loss right below the candle that is first entering inside of that fair value, or closing above that fair value, something like that, like maybe this low or whatever it is creating over there. Same thing will be happen here. If it breaks below that, I will close this position, take a sell short up until whatever liquidity I can feel more comfortable with, or as I said, I want to check the 1 to 2. If it delivers or not, I will hold until that far. Let's see. Okay, let's not speculate or say too many things at a time. It will make you guys confused. So let's do the market what it's willing to do. I will even remove everything from here. Okay, I don't even need to do that. If it can close above that area, my stop loss, I will be moving below that candle's low. Even though there is a volume imbalance, still I will move there. Okay, still it didn't close, so just leave here. It's okay. I think it's going higher from the most valid possible area over there. Why? Fair value, retracement zone, the higher time frame bag low or breakaway gap low, everything's common area tap messed over there. That is where it came. So let's see, I hope it's still closing above that fair value, this fair value, and creating a new one around that area, that will be even a great sign of just because of that volume imbalance. No, actually I'm willing to move it there. Let's see. Now let's see what really. Okay. No. I'm not great, brother. I'm not great. I'm trying my level best. The way I use it, I'm trying to deliver you guys that. If it makes sense to you, you can try to figure that out or use it for yourself, or you can build a strategy around it. If it's not working for you, just ignore it. Okay, like if there is something else valuable you are getting, that will be better. Okay, so I don't know. So I'm saying this is the retracement area, that's why I didn't move it first. And during the retracement, the only fair value it created, it failed to create at this low. Okay, I didn't want it to inside that range, I want it this low. So that's why this fair value is not too important to me. I want to see market is trading higher from here, if I'm right about my thing. Okay, why the candle first showed green and then it turned black? What's happening, guys? When price was coming here, it was showing it green already. Okay, I got it based on the previous candle close. That's causing the confusion. Now it will not do it anymore. Don't tell me the CE is holding the price and sending lower again. I want to see a big displacement from there. You kidding me? That volume imbalance as well. That's why I said, like, if there is no volume imbalance, I would put here or like there. Let's see. We have found our thing. So if market is willing to go higher from here or not. By the way, even though that stopped me and I didn't close the position, let me just make it bit better. Execution levels, let's see. Bro, that's $1125. How hard it is for you to go higher right now, since you are finding too much resistance around that area. Yeah, just you had to revisit that volume imbalance. You have done that. Now go. Now a big move. I'm expecting another big move, and that move can, if it can create a fair value, I can utilize that fair value for higher movements or something. Okay, and that CE actually sent or hold the price for now. So let's see. I'll just draw a CE over there and then remove the Fibonacci line. By the way, guys, since it stopped me, I want to see the same thing. Oh, okay, I'm not getting the chance, I guess. So now that the volume imbalance is revisited or retested, I want to see like how this would have worked. Okay, like keeping it here. So I have to move one more candle here. Targeting not that high. This high is already giving something that I ask for, but I'm targeting even something like this. There is a reason. Okay, like I'm expecting if market can give me a break of a structure here, market should go and close above that 15. Okay, oh, boom. Okay, so you know what happened right here, right? I was expecting this as well. Now let's see if it can create a fair value around that area or not. Which area? From the highest wick to the highest body. Okay, and if it can happen, then that fair value will be the fair value you guys will enter. So remember, one entry I have from this, and the stop loss is at this level, and now based on the rest I will just remove it to make the chart clean. This is again a retracement area, so market can retrace there, but it's better if it can create a fair value around that area, even though there is the 15 minutes fair value, it didn't hold the price. Okay, so let's see. I'm zooming too much just because few people have issue with their if you share something that will work for, okay, no, there is no guarantee, guys. There is no assurity, no guarantee. Okay, even though it has worked so many times in front of your eyes, in front of your live stream, what did I said about that low, that because of that volume imbalance, this low is not a good area to put the stop loss. Okay, but I still put the stop loss there. Anyway, it is what it is. Market has created fair value, even it's breaking above that retracement area, just tapped into that, and that's the move. So if you know what you are expecting from the market, this is how you can get your profit. Okay, I actually, like, I was not looking into another trade straight away, but since that was the only fair value, this was the entry, and this candle's low, it's permissible because of that volume imbalance. Now that happened, until that high you got your entry, you got your profit, but I'm expecting even bigger run. So let's see what happens. Okay, why you had to close that entire range straight away, man? First fair value, second fair value, it sounds beautiful over there, but that entire move, it came back. What do I have over here? Is that the 1 minute last fair value? Nothing. Let's see. Actually let's see what it looks like over there. Okay. Yeah, so now you got the rejection or reaction from the level it can react. Okay, based on the 1 minute price action, you see that tap into that area, that was the, I don't know like how I can find it. So you see, small fair value, guys, size very small. Okay, I don't care about this size, as long as it's in an area that makes sense. This is a very good area. Why? It's confirming this propulsion block. Inside of that you have this small little one. So even though there is this huge one, that one is more powerful, and you saw after that huge move, market literally came all the way back until this part. Now when market will close above that, I will try to look for another entry above that area based on the 1 minute price action. And I believe market is going for those buy side liquidities that I expected previously. I hope that is the buy side and not another fair value. Yeah, so those are the buy sides. So let me just put the annotation over there, BSL. Yeah, so let's see what happens. Still no problem with all these things. Rejection, like retracement area, and there is a fair value sitting right there as well. So market can retrace here, then again go higher. Once it has done that with that wick, again it can come here, as long as it's not doing a huge displacement and fair value gaps. No problem with whatever market is doing right now. And it could have been better. This candle, if it can close above, that is a 15 minutes candle closing above that 15 minutes last fair value. I want to see it's closing above or not. That could have been the best thing ever happening during this specific price action. Okay, too many lines. If you are getting confused, let me know. Okay, like for this entry, okay, that high, since there is nothing, and that is the last fair value, not because I'm seeing the rejection, I have taken partial even today, the day I made $3,000 each account almost. I closed at the last fair value level a partial. So that's why I'm saying even if this is my entry, if I'm not taking at the recent level, that is the level I might have taken a partial also. Look this way guys, entry, this is your stop loss. Remember how far it went up until that far. This is 5.27 R. If you trust your process, then this entry could have given you, I don't know, like with whatever risk you are taking, let's say like 203 lots is $225. Even if you took that, it's giving you $1185 with that move. But since it's the all-time high, I'm not even holding until that far, just 1 to 2 or this high. This could have given with the same thing 3 lots. This is $480 with $225 risk. Okay, now this is the retracement zone from where market is going higher. Beautiful. Same thing, it's continuous. As I said, like this is where my stop loss is, this is my entry. I'm willing to see if it goes to that buy side or not. Okay, since the 15 minutes failed to close above, this candle failed to close above. Okay, this was the 15 minutes closing, you see right here, that was the 15 minutes closing. Let me mark a line from that level, the previous candle's closing, and now you see the black candle will align exactly over there. See this one. Let me change the color from that area and turn it into something like orange or yellow. See, that black candle's closing is where the previous 15 minutes, so it failed to close above that fair value. So this fair value is what, like this candle is what actually closing above the 15 minutes. But I believe for now that this entry market might not come back and give you, like it may go straight from here. Once it breaks above that, that might cause some resistance and send market high. Okay, it was too quick, but I'm willing to take a buy here as well. Let's see. Do not judge me based on this. Okay, this is just some experiment. Remember, the original entry was here. Now the retracement happened, it took some liquidity. This is my stop loss, so I will put it as my inducement, so that if market takes this low, you know I have stopped out over there, and this was my entry. So first partial, I will put it as my entry. Okay, so first entry from this fair value, like even if I'm not counting the other one that I took based on this fair value, was there one or this fair value, I forgot, whatever it is. If I'm not counting that one, this is the one. Okay, I'm looking for this one until that buy side, and that's the reason from this fair value, when market broke above, I used that fair value as my entry, and this is the candle that actually went back inside of that. So that candle's low, not because of the fair value it's sitting, because most of the time you will see something like this. Okay, market will revisit that, then it will go higher. It will not even come back inside of your fair value. It came here because of that volume. Okay, there was no other thing until this far, so this one was valid. But I was talking about this one. Market came lower inside of that fair value, no problem with that. But what did I say? The first candle that entered inside that low is my entry, stop loss. Same thing over here. When the first candle closed, this is the same candle broke above, so this was the stop loss. But when I was placing it, I said this volume imbalance can cause some problem, and that is exactly what you saw. No problem with that. Same thing I'm doing here. If it can stop me here, I will be happy to take this loss, but I'm expecting market will go higher. Whatever it is, let it do the same thing. I'm following the same rule, guys, even if like there is a small little volume imbalance as well, but still I'm following it just to check like how these things works. Okay, as simple as that. Remember, this is the place where still I have a running stop loss, the imaginary entry from that fair value. So if it can take this low, I will be out of both of my position, and still there will be some profit as well. So this is paper trading. Let's see what happens. By the way, let me keep this on in a place where I can see this fair value. Okay, it's too big, but I want to see like if actually market displaces with a bigger move and never comes back here, or if it comes back or not at all. Because most of the time, like around this, okay, yeah, that's what I was actually saying, like most of the time around this moment it gives a huge move, but I don't know, like based on this candle I'm expecting it will expand even higher. If it doesn't, I don't know, like as I said, I might be wrong. This is the observation and the expectation. It doesn't have to happen every single time, but I still, by the end this candle close, if it can go close to that or near to that fair value, that liquidity, okay, it stopped me, it came back one more time inside. So let's wait until the close above this fair value happens. So guys, this move gave a pretty good amount of profit, okay, don't get me wrong, but it is what it is. I'm expecting even a bigger move, okay. So it gave me until this far. Let's see lunch hour how it plays out, if it takes this low as well or not. It has stopped me out from one of the position that I have tried here, but my imaginary is still running. If it can stop me out again and create a huge fair value around that area, this is where I'm wrong during the lunch hour. I'm happy to accept that, and that's also giving me partial profit as well over there. Think about that way, okay. And I hope there is no news. Just a second, I have the coconut water that I should. Just bought a small little bar freeze because that's what I should keep very close to me when I'm trading or when I'm streaming. Let's see what happened. Your teaching and voice reminding me T2 bro. Yeah, because we are from the same area, guys. We studied in the same high school, same college, then the university coachings that we have done, or whatever, like the private tuitions we have taken it from the same teachers as well. We know each other for very long time, guys. So yeah, we are from the same area back in Bangladesh, so why not? Your name, bro? I already said, but my name is Asif. If it's hard for you to remind, you can call me Moto for you. Okay, so yeah, if it's hard for you to remind all the time, like keep in mind all the time, then you can call me AK. Okay, so now what's happening during the lunch hour? It has taken that, it has created multiple fair values. Now you look for a sell short, guys, because it failed to close above that last fair value gap from the 15 minutes. Okay, let's see, like let the market give you that. You are getting your market structure shift is still here, but for that you need a fair value as well around this area. So you have, oh okay, I actually missed it, liquidity grab, market structure shift. So if it can create this fair value as well, it's a better option. If it fails to create a fair value around this area, then that area I want to see the respect first, then I will consider looking into a sell short. Other than that, if it goes above that fair value one more time, I will take the exact same thing at that fair value level, the buy long. Okay, so for this specific area, what I'm looking into is, if market is willing to go lower and take the sell side liquidities, I want to see it's going here coming lower below this, creating a new fair value around this level. Then I will enter from this fair value for a sell short. If it's failing to do that, then I will look for a disrespect of that fair value first, so that I can utilize that bearish fair value or the only fair value for my buy long or the continuation towards the upside. So everything is depending on how market is doing around that area. Okay, because what happened right now is market all the way created the lower wick, traded into the 15 minutes fair value gaps midpoint or the consequent encouragement, failed to close below that even in 1 minute. Now it's again going above that fair value. Okay, so this is the zone you have to watch if market is actually willing to go higher or it's just going back inside of that fair value and then coming lower. So if it taps there, comes lower, closes around that area and creates new fair value, that is when I can consider going for a sell short from the break of a structure. Up until that happens, I'm expecting whatever happened during this was the launch our liquidity grab. If this candle can close above that area, I will take another buy from that exact same fair value gap. And this time where should be my stop loss? Here, because that is the first candle that closed inside of that fair value, not because this is the fair value gap bullish fair value. If I'm utilizing this bullish fair value, my stop loss has to be below this candle's low, because third candle of the bullish fair value. Okay, 5 lots feels good. Okay, that's why I'm taking 5 lots. How many? 26 seconds. Come on, 26 seconds. I'm just waiting for the candle closer. Close above or at the level, close above or at the level, something. Beautiful. Come on, I'm entering into a buy long. I'm putting my stop loss right below here. TP at the buy side. Let's see, like, don't copy guys, please do not copy. Okay, like this is the launch hour, no trade is valid for the first thing to understand. The other thing is market can still go lower because there is the order block sitting right there. Okay, so do not copy my trade, do not try to press your button. It's just experiment. I'm just experimenting. Okay, it's coming out of that 15 minutes midpoint. I'm experimenting that if I entered early, later on if market closes above that fair value within the 2 minutes, if it can, okay, then okay, it stopped me, all calculation gone. Okay, simple. First candle closed above, the very next candle with a volume imbalance came lower, stopped me out. I'm happy with that. So let's wait until the 15-minute candle closes. This 1 minute and 53 seconds. So do not utilize this one straight away. Okay, when you have something like this happening, do not utilize this one. Wait until your higher time frame point of interest is actually broken on the higher time frame. It will be broken, but yeah, I mean, I was too conservative with me. Okay, also I didn't see this, guys, I'm sorry about that. So let's see if I saw that and put my stop loss somewhat around the mean threshold of this order block or something, if that could have saved my back or not. Because ICT said when your 3 level of defense is broken, the next target is your ass. So it's my ass that market is targeting. First level of defense was that inversion, second level of defense was that bullish fair value, the third one is the order block. So let's see. 15 minutes, please close above, please. I want to utilize this one even though everything happened. You know, okay, I have read that one. Really great, modestas. No, brother. See, now you might have changed your mind. You are really great thing. Okay. Ninja. Bro, you only trade silver bullet in London session only. Yes, brother. Exactly. That's why New York session is still something that I'm trying to observe. See the last minute candle. This is the very last. So it still did not close above in the 15 minutes time frame. So if what I'm expecting now, it's creating a fair value if it can break below this one. Okay, this one, that is when I will look for a sell short entry. Also the PM session, maybe market create the wick on the upper portion, and this might be the high of the day. Just close below that, man. Yeah, okay. It will not give me the entry over there. And 15 minutes actually failed. Okay, so this is a better option right now. I believe stop loss had to be above the third candle's high based on the fair value gap, and since it's 11:25, I want to go at least something like this, maybe 2500 or something. Now is there any reason for market to not give me the entry over there? No, it even didn't reach over there. So let's see, let's wait until I get an entry. Or I will look for a market execution. I still believe it gonna go higher later on once the lunch hour finishes. I don't know like how the lunch hour works, but if I find setup, I will take an entry. Although ICT said not to, but based on the market move or based on the price action, I would love to take this entry if market can even reach to this fair value, keeping the stop loss same, because that's also, if it's a breakaway gap, market should keep some portion unfilled, and that's the gap candle's high, so it's the same. Now 28 is what I'm targeting, and since these lows are actually, I'm going even lower this time. I'm going up until, let's see on the 15 minutes what it looks like. This is the order block, so if I target up until this far, what happens? That low. Yeah, I mean this is a huge wick, so makes sense. Let's see guys, let's see if I'm again on the wrong side of the market or not, because the retracement I can expect that, but 4,000 too much. I will take a partial at a 1 to 2 or something. Where does that take profit? Somewhat around the order block level, which is here, or propulsion block actually, and at 1 to 2 I will take a partial. So where is that 1 to 2? Or at the most obvious level, but anyway, it's very close to each other. So 2, let's see, buy limit, that's 1 to 2. Okay, based on the entry and stop loss, and that's actually aligning with that liquidity. So let's see guys, let's see. You know what, it actually reached to that fair value, okay, don't worry about the retracement area, just moved a box from there, it actually reached there. Now what if I'm on the right side, market will give me a fair value around that area. Okay, like it will either at this area or even around the lower portion because of that low. So it will give me a displacement. That's what I'm trying to give you or tell you guys, but let's see. Let's see if I have any sort of idea about the New York session or not. Once this partial is hit, if not the stop loss, of course, I will move the stop loss to the break even or even a most obvious level that market can leave or create during this move. Okay, and I will explain step by step as well, like if it plays out. Let me clean the chart a little cause too many lines according like with the moves. It's on. No, even though it was a good area, but still I'm not willing to keep it. So since market is here, all I don't want to see it's covering the entire fair value gap. It should leave this. If I'm right about the thing, then market will leave some portion unfilled and close lower. If it fills it up, chances are high again the stop loss will be hit, and I'm not liking this fair value at all, so I'll keep it here expecting that it will turn this into a inversion fair value. Still a tick. Still a tick. This fake thing over and over again. This is why I don't like New York session, to be honest. Like too many accumulation manipulation phases goes inside of a New York session. But let's see, guys, let's see. If I'm right, I will be right until it hits the stop loss. If I'm wrong, I will be wrong the moment it hits my stop loss. It's everything depending on that stop loss. But please do not try to copy me. Your name, okay. My brother is also replying you with my name, so I hope by now you have got my name. Okay, just the last 1 minute move or 2 minutes move on this candle, man, that was crazy. I'm just holding that line. Okay, let me remove this one because this is also too many lines making or creating confusion. Entry, stop loss, then the order block. I will just mark the min threshold and then leave it as it is. So I'm right until the stop loss is hit, and I'm wrong the moment the stop loss is hit. Now what can be the ideal situation right now, since market didn't create a bag over here? Okay, what can be the ideal situation? It traded the order block. I want to see, like, it traded the min threshold, it came below, closed below the order block. So I want to see a rejection from either this order block level, like the body and the wick. Let me remove everything else. Okay, the inversion I still need, because if market can close below that, that will give me more confidence in the trade. But for now I'm very less confident about the trade, but up until market does not go back again to the min threshold. Once it traded the min threshold, the target for the market is this low. Okay, this is the target for the market from that, because this is the retracement low that it created. So if market is bearish, it should not go back to that min threshold one more time before taking these liquidities. And if I'm wrong, then this fair value will market will respect this fair value, it will go and hit my stop loss, which I'm not willing to see from the market movement based on what happened before. Okay, and this entry, what did I said? I took it after the break of a structure, so usually it works even better because I waited until that far. But let's see what happens. because I have very less experience in New York, especially the PM session or even during the lunch session. So I'm trying to generate that knowledge as well during these live streams. Your own brother doxing you? What concept do you trade, bro? What concept? Something like ICT concept? I don't know. Maybe this concept is called ICT concept. Your own brother. Janine, you didn't get the point, my friend. My own brother was not doxing me. My brother was replying to Ganesh Karthik, who asked, "What's your name, bro?" Okay? He was replying to that. I don't know why he wrote KORIM, although I write KARIM. I want to see market closing below that fair value and respecting this as the inversion fair value. Okay, and as I said, I don't want to see one more time market is going to the mean threshold. So let's see what happens. Even like this week actually traded the order block because it starts from here, but usually we look mostly inside of this. Okay, we look inside of the opening price. Market has this much room to trade back, but not back to the mean threshold. That liquidity is taken. Now the movement of the market will decide if I'm right about the rest of the liquidity or not. Didn't understand. Was he just saying something in your language, or is what your name? Is that what your name now? No, that's my name, brother. That's the full name he wrote over there. Because Ganesh Karthik was asking me, "What is your name?" So my brother, elder brother, came and replied to him that Asif Karim. But I don't know why he wrote KORIM, because I write KARIM. Karim. Okay. Karim means kind or something. Okay. Is this something hindsight? I don't believe it. Okay, but let's see what happens. See the fair value around that area. I'm expecting a bigger move until market takes all this liquidity, but as I said, there can be this as well that can send the market higher. That's why I put a partial above that huge week's level, and the most obvious was this low for that order block. Based on that, market is creating a fair value around that area. I'm willing to see this fair value is here, and if market is willing to go lower, this time this fair value will be respected and market will go lower. That's what I'm expecting if it can keep the fair value. It came to that okay, this is a scary candle, this candle. So I'm okay, it has created a very small one. Let's see what happens. It came until that body, if it's willing to go any lower or not from that volume imbalance. But this time it must has to keep this one as a bag. It cannot go higher anymore and create new fair values. Okay, so I'm expecting even if market can go inside of that fair value, it will leave a portion open on that, and based on that my stop loss is now on break even, $0 if I'm right about the market. Now as I said, I don't trade the New York session at all, so sometimes I might be wrong inside of the New York session. It worked inside of that area, it's working here. So let's see if still market is willing to go lower or not. It has taken, don't forget that it has taken this sell side, it has traded into that last fair value, nobody still closed below that, so it's going up from a valid area as long as it keeps some portion open, comes lower and not hitting my stop loss at that level. So the first partial that I set here after all this, when it failed to create the breakaway gap, this was the most obvious. Along with that, maybe this low was the most obvious. Above that, last fair value gaps high. That, okay, why there are too many? Okay, it failed to create that bag, so now it gonna stop me out at the break even. That's pretty, yeah, that's pretty confidently I can say, because it didn't keep that breakaway gap. But see the reaction and delivery, that's what I was expecting from that, and that's why the stop loss was there. Okay, now the new subscriber Donny, hey, welcome brother, welcome. Is this the, no, this is not the silver bullet, my brother. This is not the silver bullet. It's 12:43 p.m. okay, it's lunch hour. There is no trade during this. No trade during the lunch hour is valid according to ICT, but I'm just testing out a few things. That's why I'm showing you the entries, or I'm trying to place some orders over there. Okay, and for someone who doesn't know how it works, let me actually sign out of the paper trading for a second. Let me go to the other screen so that I can log into the TraderPath, or actually let me keep this on here and bring you guys my today's trade from TraderPath itself. Okay, I don't want to actually show the login details over there, so let me just minimize this and log into the TraderPath account. You will have a lot of good answers over there, guys. The session I trade, the way I trade, you will understand that from the report. See that IFVG, it's still holding the price. This is the first time after breaking below, market came there, but it created another fair value during that, so that one might act like no longer hold the price, and it has also taken the lows that it was supposed to take during that specific move, and it failed to hold over there. The breakaway gap failed to hold, so that is where this fair value is no longer in need. Instead, this area now became the BPR. Okay, now I'm looking into the thing. As I said, I don't trade the New York PM session, so I might be wrong in so many places, but in my London session, guys, what I do, I will show you. Just give me a minute to take the screenshot, because yeah, okay, that's how it looks like. That's how it looks like in my today, which is, it's showing yesterday because it's already 4:48 a.m. in my time, and on the TraderPath it's set on to my local time. So I hope the date you can see is 7th on my time. It's already 8. Okay, it's Friday here already. So yesterday or today's London session, this was the entry and this was the PNL. So yeah, good luck if you are trying to come here and mock someone, but if you are not, then yeah, I mean, it is what it is. The stream was not about the New York session. The stream is more about the silver bullet explanation, which happened at the very beginning. From this, all this thing is happening. Okay, London created the low of the day. We can expect New York is creating the high of the day. So until market can go and take all the highs, at least close above this 15 minutes fair value, no entry will be a valid entry during the during the lunch hour, but I'm trying something out. Okay, so this is 1 a.m. from where lunch will be finished, although some people looks or waits until 1:30, and whoever asked for the silver bullet on the PM session is from 2 p.m. until 3 p.m. Okay, so I will maybe consider that time frame, but during this time as well I'll look for something. This is 12:50. Let's see, like this 12:50 move how it goes, and then I will explain what I'm looking here. This is the 12:50 closing, and let me annotate this one as the silver bullet start. Okay, so yeah, I mean, it is what it is. You saw the PNL. I have already I was actually editing that video before coming to the live. So let's see. I want to see like it's taking some sort of liquidity with this move, maybe this low or even other lows, and then if it's still bullish, then market will give me a bullish fair value gap and a bullish move within this time frame. So 110 and 1010, this 20 minutes time frame. First I want to see some sort of liquidity is taken, then a bullish move or whatever, like the opposite move. You don't need any bias for that specific time frame. There is something called macro. Okay, I'm looking for that one. Let's see if it happens or not. I can see something already, so if it can create a bullish fair value and close above that, I will try to take a entry, and I will show you what do I mean by that. Just wait until that happens. Yeah, yep. So let's see. And let's read more comments because it's fun. What did they said? How did you enter on London? Will you show, brother? How did I entered? Perfect translation. Will you trade London tomorrow live? London tomorrow live. I don't trade the London tomorrow, like London session live. The reason behind that is I like to focus on the market more than the live streams. So if I turn on my comment and read my comments, that will be distracting to me. I cannot do that. Okay, here I'm using a paper trading account. Now I want to see a displacement with a fair value gap. If it can create that, I will try to look for a entry for a buy long over here because of the macro time. There is nothing else. Okay, now this time this order block and min threshold is no longer needed. Create a fair value, please. If this fair value is here, then I'm not willing to draw it earlier because yeah, as I said, like let the candle close first. Whatever the fair value is, I need a fair value, as simple as that. Yeah, I can see there is this fair value, but I'm not willing to enter from that fair value, although that might have been a valid entry based on this, but I'm not willing to do it because it failed to create that at that, like the displacement didn't happen over there. So I'm not willing to utilize this one as my inversion and then take an entry from that during the macro is a different thing. Okay, for example, if this was the entry, then I want to see market is at least reaching up until 20 handle. From here until this. And same thing, the stop loss should be here. If this is the entry, then this is the stop loss, not any lower. Okay, based on the candle, but it failed to displace above that high and create a fair value around that area. That's the only reason I'm not utilizing it. Suggest any your video. Ninja Hattori, any of my video. I already suggested only 3 videos in my channel. 3. Okay. The first video is, you can see the silver bullet. The second one you can see in the same playlist is the dealing range type 1. Then you can see the dealing range type 2, and then you can look for the ICT entry models, based on what you can actually build your own strategy as well. You don't have to trade what I trade or the way I trade. You can trade based on whatever strategy you are willing to, or whatever the PD array you have mastered. Okay, as simple as that. You really don't have to do anything based on my setup. You can take the information, you can utilize it on your own strategy. So that didn't provide, because as I said, this is why I was letting it go, or I was willing to let it go. It failed to displace above, I was willing to let it go. And perfect transition, if you are looking for some of my live executions that I actually took into account that matters, so that actually the loss or profit that matters, then go from this this live stream 75 capex challenge from here until this one. Okay, before today, because or maybe I don't know, like even this day I didn't trade, because these two the 75k and NI PM session trading, these two will give you so many of my live executions. Okay, and it was on a Apex account. I completed it almost all of it during the live stream. Just the day I didn't stream, like in between here, that day I had time to complete it, so I completed it off stream, rest of the money, but most of it I have completed in these 2 days. Okay, 75k challenge I completed in 3 days. All of them will be here, and if you are looking into few of my other streams, you will have so many over there, but it's mostly these are the big streams, so this is, I have to delete it later on. I don't know like why it's still sitting over there, but that stream happened over here. My internet was disturbing, so I had to stop the stream. So these two is nothing. I have so many streams over there. I haven't removed anything from day 1 up until now. So since I haven't removed anything, you can still look into those things, like especially these two. You can find so many of my live streams. And I prefer not to do that, because as you can see, from here is where I started showing that disclaimer. Before that I had no disclaimer. Even I don't know if I showed disclaimer here or not. So this thing can cause me even going to the jail as well. Okay, if some of you are taking my trades and losing money, then trying to blame me, that's on you. You should not be copying me. Okay, if you have something in you, if you have the knowledge, if you know something, you utilize that. How, like even ICT, okay, think this way. ICT traded 30 years, and then step by step he made all these things. Okay, all these dealing range, these market maker models, this fair value gap, order block, this and that, so many, everything ICT. Like, just look, like whatever I have showed over here, it's just this is the move of the market. A huge wick on the upper portion, a huge wick on the lower portion. That's it. It's just consolidation. During this sort of price action, you just avoid everything. Now you saw me drawing a fib from this specific candle, and that's the candle's opening price where market tapped and started going higher, and it stopped me on a break even or something on the entry that I showed. Why I was looking into that specific thing? Just see, like, all this price action, it failed to create any fair value gap, entire thing, and this is the highest wick that you can see inside of that range. This is the highest wick you can see over there on the 15 minutes. So chances are high that since it failed to create fair value within all these moves, I'm expecting maybe on the higher time frame than 15 minutes there might be a fair value, or lower time frame than 15 minutes there might be a fair value. The middle point is acting the way your fair value should act. Okay, this middle point should act the way your fair, like you will think this as your fair value gap's middle point. If market closes below that, there is a high probability market is going lower. If market respects that and starts to go higher, there is a high probability that whatever you thought about the upper run from the PDRs inside of that area, that will hold the price and send market higher. This level is very important. Along with that, that level was also important, because that is the start of your fair value, that is the end of your fair value. The same way you trade or treat your fair value gap. Now look very closely. I have removed this inversion fair value a long ago. Okay, but that is how far market came, and then it started going higher. So there is a reason behind a lot of things. Okay, and where is that inversion fair value happening? Inside of that wick. Same with this fair value, where is it happening? Inside of that higher time frame wick. So the unusual wicks has the power to send the price higher. What is this? For a lot of people, this is a hammer. This is a bullish hammer. When a bullish hammer occurs, market revisits the hammer level, then market goes higher again. This is the hammer level that market revisited, now going higher. Now I don't care about those, because those things I have used before, those terms I have used before I came into ICT. But when I came into ICT, I'm using the name that ICT is using. Okay, I'm using the name that ICT is using, but I still look into a lot of things from my previous way. That's why you see, like, the day I trade like that way. You want to see my executions? Maybe let me show you the executions as well. Although it's here inside of this, okay, I'm expecting whatever market is doing afterwards, that thing. Okay, all of this I have already showed before, but my execution, this is where market was when I'm putting my entry. Unfortunately, I didn't record any audio. I didn't notice my OBS microphone was off over there. Okay, that's where I got my entry field. Okay, and now why it's not showing anything in front of you? Because I was zooming it too far. Okay, let me just put it fit, because if I don't know if how that is fit, but this is the range. I still need to reduce it. What the hell? What happened? I don't know, guys, if I have messed it up or not. Now let me put the fit. Okay, so that is where market came, and that is where I took that's the only entry I took. Okay, and that gave me nearly $3,000 profit. You saw the video before this, like all of those videos that I have uploaded execution, the days I'm profitable within that first entry. I don't really need to look for another entry, or don't really need to hold the trade for longer. Look, there are a lot of things. The things that I'm showing here, the levels that I'm drawing here, that's the exact level I'm drawing in the New York session as well, just to see, like, when I'm talking about the London session, I'm willing to see that it's working the same way in New York session or not. That's why you are seeing me using a paper trading account trying to take a entry or something, nothing else. It's just to improve my knowledge about the New York session, nothing else. I don't really need to look or sit in front of my computer up until 5 a.m. in the morning. I really don't need to do that. The only entry I took, it's profitable already here. I'm not doing anything else. Now if you don't want to see that thing, let me just sign out of the paper trading and bring my TraderPath account on last time. Okay, that's the execution. Okay, it filled me up in two tick, like it came on the same level and filled me up on the same level. 3 lots of entry, first partial, second partial, final take profit, done. I didn't even hold until the middle point of the fair value. I just held it until that level, and along with that I believed that there will be, like, if market is willing to go lower, it can go lower from this area, but I didn't even hold until that area also. I just closed my closed my entry from this 15 minutes fair value. The 25% level is where I close my trade. See, you look here. I don't know if you can see it or not. Let me zoom it little more. See, that's the 25% level. That is where I close my total profit based on nothing. Here the liquidity was until this far, but I held it because I know that a fair value gap, the 25% level, have the power to send price lower. The middle point got the power to send price lower, but it was crazy bullish. Market went even higher, but by now from here until that far or that far, whatever partials I have closed, I have made my. Did you wait for market structure shift before FVG? It depends. It depends on the price action. If I waited until that high to give me my market structure shift, think this way. Okay, from here I entered and I'm waiting until that high to give me my market structure shift. If it gave me the market structure shift, I have now 1 fair value, 2 fair value, 3, 4. Where can I expect market to come? Or even let's say this is my market structure shift internal that you can use as well. Then this is a first fair value, this is your second fair value. Other than that, you have no fair value around that leg. Did market ever came did market ever came inside of any of those fair value? What can you see? Did it ever came? So how did you get your entry over there? The same thing that I'm showing you guys, the entry was based on this final fair value where you could have entered. If not, if you waited until that far, then this is your breaker. This is your breaker block, and that is where you had your entry. If you took that entry from here, by the time you took the entry, I have already made. Just think this way, guys. Think this way. What is that price? I don't know if you guys can see it or not, but that is 976.25. okay, this is 976.25 where I took my partial, and the entry was exactly 942.00. how much with one lot I have secured? By the time you are looking for your entry, I have secured. This is 25 cents and this is 34.25 handle, which is exactly $685. 34.25 times 20. See, so by the time you are looking for your trade or entry, I have already secured $685, and my other 2 lots is also running in that same profit. So other 2 lots is running in $1,370 profit when you are looking for a trade. That's why depending on the price action, I do what I do. I don't blindly follow a thing. I don't need to do that. When I know how my session works, how my silver bullet works, I can do it this way without a fair value or without a market structure shift. Okay, the first thing I was expecting, this will go and close above at least this fair value, because that is the first fair value, this is the second fair value. So if market is bullish, it will go and close above that. That's what I can expect. When the very first candle came here, I took this aggressive entry based on 2 fair value gap that it created and based on from where it is coming out of. Okay, it's just simple. On the 15 minutes, where is it? Here, just a second. Let me go to 15 minutes from this area. You see, this fair value is the only 15 minutes fair value that market should trade and go higher. This is the Asia sessions low. Inside of that area, in 1 hour, I have this last fair value of the first fair value that should act as a breakaway gap. Market has left the portion open, market has started going higher. So when that started happening, I don't need to look for anything. I can even place my trade over here. Also, I have already shared the OTZ OTE concept. Okay, from where it is coming down, it is coming inside of my OTZ. So when you know your session better, this is how you can utilize that. When you don't know your session, what I'm doing right now in the New York session, that is what gonna happen. As simple as that. When you know this, you know how to enter. I don't even need the 1 minute time frame. I can just enter based on this, because the market structure shift already happened from here and here. Okay, and it has created nothing but equal highs. If I entered and hold my trade based on the 15 minutes price action, then this is already my entry, and that high is the only high that I might have targeted, nothing in between. Here I targeted or closed my position in between areas. Around this area I closed, that already gave me more than nearly like $3,000 just around this area, and think I'm holding until that far, just based on the 15 minutes price action. Even if I'm entering from the OTZ or from this previous fair value level, even if I'm entering from this previous fair value level inside of my OTZ, go to my channel, check the silver bullet setup, what I said about the OTZ. Okay, and the exact candle when the silver bullet, this is the 3 AM starting. Okay, so the silver bullet started, that candle came inside of my OTZ. So this is the equal or relative equal high that market has created, this high and that high. It's giving me 1.95. if I see something like this, I target 1 to 2. As simple as that. If the high is not giving me 1 to 2, or the liquidity is not giving me 1 to 2, I target 1 to 2. This is 238 handle, which multiplies by 2. Okay, 4,000 something with 1 lot. I had 3 lots worth of entry over there. So there are so many things I can do during my silver bullet. It's not just because of the bigger swing, bro. Danny C. It's not. Oh shit. I just spilled my coconut water. Anyway, it's okay. So it's not just because of the bigger swing. It's most importantly from where it is retracing. If it's not retracing, or if it's not giving you a lower time frame fair value gaps or entry patterns or models from a higher time frame point of interest, then you are not taking that entry. Just look, that area, you have a order block over there on the hourly chart. On the 15 minutes chart, you have this last fair value, the very last fair value. the sell short that I looked for until that week's 50%. I know it's a very okay, let me actually sign off and then show you the paper trade thing one more time, because those entry had a lot of things to tell you. Okay, what did I say about those paper trades entry? So many you are seeing over there, every single entry when I'm taking or exiting. When I took that entry, what was the where was that sell short that yeah, here I put my stop loss there because of what? Because I'm taking the entry based on the fair value, right? So the breakaway gap candles high is where I'm putting my stop loss. I'm not looking into order block. I'm not looking into this one as my order block, nothing like that way. I'm putting there. Okay, why I'm putting there? Because that's the breakaway gap, that candle's high. Why I'm putting here is because if this is a breakaway gap or market makes this as a breakaway, in 1 minute, yeah. So if market makes this as a breakaway gap, let me just take up that execution, it's very disturbing, then it should not, first of all, it should not trade until the upper portion of that fair value. First level of defense, second level of defense, both level market has disrespected. What is the last level of defense? That is my order block. And if you look properly, just look at the mean threshold and also see that it didn't reach until that order block high. Okay, why? Because that's the last level of defense. Market had job to do. Once market traded the mean threshold, if you know it's bearish, then what is its next target? The retracement low, this low. Along with that, if you have anything on the left, then that is the low you can target. That's the max you can go. Because of what? Because there is your first fair value on the 1 minute. You are looking into the 1 minute time frame, right? So this is the fair value you can look into. That price might go and then start to go what it calls, start to go the opposite way. Now that order block, once market traded the mean threshold and closed below that with that black candle, it should not again revisit that order block. Why it should not revisit? Because the mean threshold respect or revisit already happened. It doesn't require to go one more time to revisit that. The next time if market wants to go revisit that area, it can be the order block opening to the low, this portion, not the mean threshold anymore. This week could have gone a little bit more inside, but it should not tap the order block mean threshold one more time. If that is the case, then this is the low, or along with that, if you have a relative equal low, which in this case this was the very nearest low, and this was your last bullish fair value from where market can go higher. So from that level to this level is what you could have target the max. Now if you have taken any partial over here, your stop loss has to be at break even. If you are not closing all the position looking for a bigger move towards the downside. Oh shit, it was just a second guys, it's actually, I thought it's a very small spill, so I didn't give attention to that. It's actually has made my entire mouse pad or desk, I have a huge desk pad over there, so it's going underneath that. So let me just wipe it. I didn't realize it's that big. I just wiped the smallest spill, but there was little more inside. Anyway, so what I was saying is this low. Okay, the obvious level is this one for everything. Even if let's say, let's see what market is doing right now. Let's say this one, this fair value is holding the price. So for this fair value, the obvious level I'm seeing is this high. Why? Because that's the highest market reached before retracing or revisiting that, but it already revisited this low. So for that specific moment, this was the most obvious level. When market created a fair value inside of that, that gives me an indication of continuation, that okay, I want to continue more. You see, it gave me another fair value around this area. So when the market was coming to revisit that, this is the high market created. This is the, remember when that high was happening, I said like if it can displace above and create new fair value. Did it created any more fair value around that level? It just took the liquidity, swept it, came lower. So during this moment I'm expecting a run towards the sell side, and since I'm not seeing anything here on the 15 minutes time frame, it could have been even lower. It's during the New York lunch hour. You see, it's mostly what, it's just consolidation. It consolidated the whole time. It's just a range bound price action. Now what I want to see is market, if market is still bullish, it's going lower, it's going lower to take all the sell side liquid, whatever sell side it can take, maybe up until this propulsion block here on the 15 minutes. I want to see this area, market is coming at least until this far, taking whatever liquidity on its way it can take, but not taking that high. Then it will be accumulation, manipulation, then I want to see the distribution. I see. Thanks my friend, you must mentor me. I want to know market like you. No, this is wrong, bro. No one, even if ICT comes and gives you your, like, if he answers all the question, still there will be an issue. It's how did I learn all this? Just by watching ICT videos. Why you are not learning all this by watching ICT videos? I had no one to ask question. You have community, you have people to ask question. The reason behind that is you are not spending enough time with this one. ICT said he treats the chart or the market the way he would treat his family member. The family member needs your time, your affection, your love, everything. You have to have the same sympathy, same feeling for this market. If you don't know that, or if you don't have that, until you show that respect, that love, that sympathy to the market, you will learn nothing. Donisi, I have already uploaded a video in my channel regarding if you are willing to start with ICT, where you can start. Now if you have some knowledge about the order block, fair value gap, or inversion fair value, things like that way, if you have some basic knowledge, you can just start the 2022 IT model. But if you want to be better, or if you want to improve, once you learn that 2022 IT model and like the mentorship, if you learn that model, once you master it, okay, stick with one simple model first, then try to improve yourself learning others. But if you try to learn everything by one, it will cause confusion but nothing. So you start with that 2022 model if you are very eager to learn, okay, the mentorship, learn that, master that, back test, forward test that. Once you are done with that, then you go for your core content, or market maker primer course, or the sniper, scout sniper, things like that. Okay, so that will give you more of the idea about more things. For me, if I had to start everything all over, I would skip everything. I will give it as much time as it needed, but I would start from the core contents. The reason behind that is the content people paid to learn, guys. Okay, I have showed you enough chart. I don't really want to learn about the New York AM session, PM session. Okay, I really don't want to. I can come back later here. Let's watch one small little video from ICT's channel all together. Okay, let's see like if that gives you some value or not. And I will actually keep another tab open because of my channel. In my channel, since I'm looking into my channel, it will not give me the same thing here. Follow to learn ICT. That's the very welcome homepage video that I have set on my channel. So I didn't even suggested my own videos inside of this. I suggested ICT's videos. Okay, so if you guys can watch. Okay, why this guy is appearing on my channel? Because it's not monetized. So these are the things that I have suggested. Although I said stop watching the 2022 model. There is a reason behind that, because I already explained in my video. Like if you are starting new, or if you are trying this thing for the first time, then stop watching this, because it will cause or make or create a lot of confusion. All you need to do is do these things. Okay, month 4 to month 9 is what I suggested, just to save your time. But if you have time or eagerness or willingness to learn everything, then start from 1 until 12. But month 8, whoever never watched month 8, please watch the core content month 8. Okay, the CC8. Okay, I'm just writing this way, core content month 8 from ICT's channel. If you want to know the market maker model, the things that you should be knowing, then everything is inside of that. Whatever confusion you will have from there, I'm planning to make videos with very short like durations. I'm gonna break the market maker model into maybe 10 or 15 different parts with very small videos, like one part at a time. You just watch it, take note, learn, or try to memorize the pictures out of it. Once I'm done with the basic lessons, I will give you the proper thing in one single video with real-time chart example. That's why I said please try to save the previous execution video that I shared. And even on the last execution video that I had over on my channel, I don't know if you guys have watched the entire video or not. This one 2 days ago, I was expecting something from here. Just look guys, whatever I do, it's calculated during London session. I don't care what New York AM PM does, but if you watch it, if you can just focus on the New York AM session or PM session, listen, all you need is one PD array, one session, and one entry model. That's it. Okay, you don't need to trade the whole New York session, AM and PM. No, you can trade or master the AM session if it suits with your time. You can master the PM session if it suits with your time. Or for me, the London session suits with my time, and this market has pretty good move during that session almost every day. I'm happy to trade London session. See this video, when I said like I made 7.5k, now lot of people might, I said a total of 7.5k. okay, so lot of people might have a issue with the title without reading a total of, because I have 3 accounts, combining all of them I made 7.5k, so 2.5k each account on Tuesday. Look, that's the only entry I took. My execution level is still on the chart. Can you see anything here, or on the 15 minutes all these moves? Anything? Nothing. If you look properly, I have a fib level, like multiple fib levels drawn over there. Okay, you see this one? I will try to give you some hints today as well. Let's see. On the previous video with the 2.8k PNL, I said try to save this one. Okay, people who didn't understand it, let's see like if I can bring back my fib levels or not from the beginning or till the end. Listen guys, you see that area? Let me go back to that area. Just a second. I'm calling it before it's happening. Okay, I don't know when exactly I started. Okay, look, when market was going higher, I'm already drawing a box and trying to write down. It's in 2x, so measuring gap should be unfilled. I'm already writing it when market. Now by the time I finished writing, it already started going lower. That's not my fault that I didn't write it, but I know how it works. Before even I do that, where is my stop loss? Look into my stop loss guys. I'm in a trade. Where is my stop loss? Now at that thing, it's not making any sense to a lot of people. Why I looked into that. See this one, just give me a second with the other one, not this one. What is that? Actually, oh okay, I didn't even move it here. I don't know if you guys can see this or not. This is the 7.5k. okay, let me get to the level where I had the measuring gap written or drawn so that you guys can understand. Not actually measuring gap, I need the fib level. Okay, where is the chart part? Come on, I need the left chart. Yeah, okay. You see this 50% level, market will create a fair value here that should not be traded, or that should not be this 50.50. This fair value will be a measuring gap. Now how you can draw the fib, there are so many things, it's very confusing and conflicting thing. That's why I'm willing to break it down into parts and then give you that. The exact same information I utilized during that silver bullet entry. Okay, now I will give you this entry from the chart if the chart allows me to draw that. This level is exactly sitting on that measuring gap on the 50% level. The same way here, you see I'm expecting a breakaway gap over here, that market will keep some portion open. Okay, this level is sitting exactly on the 25% of the fib level. But this drawing is all you have to learn based on the market maker sell model. You see, I'm not teaching you market maker buy sell anything like that. What I told you guys, you are seeing whatever you can see from this video or chart. Accumulation happened, where is the first manipulation? Upside. Distribution happening, market already created a bearish inversion that traded, coming lower. See here, it didn't even traded inside of that bullish fair value. The same thing happened even today as well. The same thing happened on Tuesday as well. If you waited for that market structure shift or that other two fair values to tap and then enter into a trade, you missed your trade. Market didn't trade into that fair value on this day either. Where did I use my entry? From the bag you are seeing on the bullish side, because if market is bullish, it should create another fair value at that all-time high, that buy side level. It failed to do that, it started going lower. Now let me give you that breakaway gap is this one. When market has traded that, when market has traded this fair value, kept a portion open on the upper part and broke below a structure, that is your breakaway gap. And this breakaway gap will always, if you are right about your projection, if you know what you are doing, this breakaway gap will always form at the 25% level of your Fibonacci retracement. Okay, like I know what I'm saying, but the drawing is very tough, difficult. That's why I'm not, like, a lot of information I cannot just explain you straight away. It needs to be explained step by step, but I will give you this. This is 25%, that is where the breakaway. This is 50%, that is where the measuring gap that should be unfilled. And you can project how far price can go based on the high, the initial consolidation high and this measuring gap. From here to here, if you draw a Fibonacci, the fib will give you the levels that market can reach. With the same information, just keep that a small part in mind. That's why I said save this video for later, everything will be cleared later on. That 50% level, that is where your breakaway gap. Now here, that 75% level is what I'm trying to give you, but look at the 25% level. That 70 is actually for the measuring gap. You see the 25%, what I'm expecting, a breakaway gap. Look at that retracement. Did market filled it up completely? The fair value that's sitting at the 25%, yeah, it didn't fill completely. It started going lower, broke the structure. Same thing, the fair value that's you can see on the 50% level. Did market traded it at all? It didn't trade it at all. It had more fair value above that, but market never went for those area before going lower. This is Tuesday, guys. You can see on the lower portion of the video. I don't know if it's appearing on my stream or not, but if you play the video, you will see the time frame. Everything is over there. It's Tuesday, 5th March. At the end of the video, I already asked you guys, like nobody actually replied, so I'm pretty confident no one gives a fuck about the end. If you are learning something, you have to watch the every single second that I have uploaded, because I felt that is how far I have value. At the end of this video or end portion of this video, I predicted the low of the day, and market actually created the low of the day over there. I predicted that -2 standard and -3 standard is where market might have closed today, or market will close and create the low of the day, and that is where market created the low of the day. But nobody actually replied, because I said by the time I'm uploading this video, you are watching, you might have seen it, because I have to do a few things as well. What the thing is, when I upload a video, okay, let's say I'm uploading a video from my computer. I don't know if I want to upload a video straight away or not, but let's say this is 187 minutes. I will show you in the live stream what happens when I upload a video. I have to put it every time in whatever it is, I have to put it every time in the scheduled mode, because of this bloody thing. Let's say I'm just putting it scheduled because I don't want to upload this video, but you see this SD, after this 7 minutes it will take another 1 or 2 hours, not 1 hour, it at least 2 hours or 70-80 minutes to complete the SD format. Before that the video will be 360p. So because of the resolution, I have to keep it on pending so that it can be uploaded with the full high definition part of the video. Every single video you're seeing here, it will be 1440p. The moment I publish it straight away, the video will see the max is 360p, and the nothing on the chart will be clear to or visible to you guys. So most of the time I have to do that, because I keep it on the scheduled mode, then I go to bed. I don't want to wait 70 minutes to see if the SD mode is completed or not. So I just put whatever time it says over here, I put another 10-15 minutes more than that time, and then I go to bed. So it publishes automatically like that way with the SD mode, because of this SD mode. Okay, so let it actually finish the upload. I'm not willing to publish it, but like I have already shared that video, so there is no need to publish the same thing. But on that specific video, I already said, like, if you guys are already watching, let me know if that happened or not. I said the price level as well, like it may go somewhat around this area. That's what I'm expecting, where the low of the day will be, and that's exactly where market went. But no one actually watched until the end. I know how far people are watching. Okay, I know exactly. If I look into my YouTube analytics, I know how far on average people are watching. So I really don't care. What did I say about this fair value? That I'm expecting market to take that high. This is the high you are targeting, not that move. Now at the same time, didn't I say like I'm expecting a lower run first before I see the higher run? Why just look on this area. Market were accumulating, now market manipulated higher. Now on the bullish day, it's not respecting this. So when are you expecting market to come lower? The moment it will start to go lower, it will do exactly something like this. Okay, this, the whole fucking thing started from here. It sounds very bad, right? When I swear or when I get angry or things like that. You see, this accumulation happened, manipulation started higher. This is the first stage happening on the market maker sell model. Let me just mark this. Okay, look from where market is going higher. From where? Can you see? Why I make money the day I make money with my first entry? This is where the manipulation started. Why it didn't take this sell side liquidity? It came that close, now it's going again for the all-time high. Why? Because the manipulation, this is the initial area from where market started going higher. So this is the level where market left all the engineered liquidity. That is exactly where market came, took it, now it's going higher again. You see this area, accumulation, manipulation towards the upside. Where exactly market came back to take that liquidity and go higher? Why not this low? Or it created that easy equal sell side liquidity. Why after reaching there market came all the way back to that area and then going higher? Because in that area you have your bearish breaker block, you have your bullish breakaway gap on the 15 minutes. This is the higher time frame I use for my 1 minute entry, but if you go back to your 1 hour, you will find even another bearish fair value gap or breaker over there. Okay, so that initial consolidation low was the engineered liquidity that market has to clear before it can go higher. It cleared once, gave you the fake move, cleared for the last time because of the Asia session. Now it's going higher without even looking into anything. It's just going for that all-time high. Any bullish or bearish thing you have marked over there, everything it has disrespected, whatever you can mark. Once it's done with that move, now it's going for that. Now during that, what market has done here? If you have asked my other form of engineered liquidity or accumulation, manipulation, distribution, then you know what market has done here. This entire move, market didn't take a single sell side liquidity on the 15 minutes level either. Look, no candles wick is closing below the previous candles wick. The only time it happened from here until this, it has taken the Asia low, and Asia mostly what we expect, consolidation. See, there is no fair value around these moves. Only fair value was at the top. It trapped more people to go long from this area. First it came short. Now when it saw short, this was the fair value and a small fair value. Market, when it started after taking that liquidity and from that higher time frame point of interest. Now I'm showing you everything on a 15 minutes. So what is my higher time frame point of interest? It can be 1 hour, it can be 4 hours. This is my 1 hour higher time frame. Why I showed you 1 hour as well with this one? Look at that breaker over there. Can you see the breaker? The same thing. Look, no body closed below that level, even on the 15 minutes as well. That's how it looks like on the 15 minutes. The hourly breakaway gap, which is this one. Okay, let me mark this one. The breakaway gap, did it kept the portion open? Yes. So this was the only level from market could have went higher. Let me go back to hourly one more time. You see that Asia low is sitting below that. Asia low is sitting in a no man's land. See, it's sitting in a no man's land, not inside of that breaker, not on the top of that fair value, just in a open area. So that low is a must for the market before it can go higher. Once you look into this sort of thing, you will catch this sort of move. When market has cleared everything on that accumulation phase, on this accumulation phase, it first manipulated people. How? Look here. Okay, let me let me teach you this. Why is this important? You will understand as well. When it created that fair value, when this entire move didn't create a single fair value up until that far, when it created that, it first it gave you some reaction like this. Look, all these candles, nothing, it all covered the fair value, even came lower than the fair value, it closed inside the fair value. Only this is the first candle that moved higher. The very next candle displaced the fair value, closed lower and went all the way back to that low. This is the final stage of manipulation. Okay, it happened like that way. Now no fair value was created and market is giving you this breaking below that fair value. Based on my only fair value theory, did it provided you the sell side? Look, this candle on the 15 minutes, this is a 15 minutes fair value, right? So this candle on 15 minutes close below that, that is the tap from where you could enter, targeting what? Not that low, guys. This is the most obvious. If it can create another fair value there, then you can go for that low. So when that fair value was created, look at that black candle's rejection or that black candle's retracement. Where did it retest? Inside of that fair value, this black candle. Let me go and put it in the replay mode. Okay, and even if you guys don't know what happened during that, let me give you that as well. Let's have an keep an eye what happened. Market, let me stop the, okay, I didn't know that the space bar will send it back all the way to the current price action, but it actually switched the price. To be honest, it should be NQ here. If you didn't notice what happened during that candle, let me show you one last time what it first did and then what was the second last move. Let me even put it 0.3. Keep an eye, it will tap the fair value, then go lower, then it will close above. You see, again I pressed the space bar, but okay. So that fair value was the only fair value that was created at the level of its original liquidity, which is this low. At that level, at this swing low, when that liquidity or that fair value was created, market first retested that fair value, then came lower, took the sell side, closed higher, tapped into the higher time frame point of interest, which is the hourly fair value around that area. Along with that, your 15 minutes breakaway gap. This is where market is going higher. Now when it was going higher, you had this bearish fair value that previously was partially filled and that took the sell side liquidity. This became your bullish inversion fair value. This is the bullish inversion. Market traded again inside of that, went higher like that. On that move, you had how many things here? You had order block maybe there, even if you can count this one, because that was responsible for this fair value, that candle. So that should act as a order block. In one single candle, it just went all the way up to that. Again, there is nothing on the 15 minutes. You go higher time frame, 1 hour, 4 hour, you will find so many things over here. Market did nothing over there. It just went higher like it was willing to go. Okay, and what are these? Do you know why they are called propulsion block? This is also a order block, but why they are called propulsion block? When it's not coming out of another order block, that is when we call it a propulsion block, but it has the similar duty for the market. Now at this level, a lot of people had already hit their take profit. You see, like when there is a high that market has reached, you will see there will be a black candle at that area. Even at this high, you'll see like the candle that closed here, later on this black candle came to revisit that area. Now the fair value didn't let it come all the way back there. Here this candle has, just look at the black candle body, that volume imbalance. If you can discount that volume imbalance, then think this way. Okay, market closed here, black candle went all the way back there, it closed back there, this candle opened, traded little inside, it didn't even trade the fair value, it just started going higher. Why is that? Think this way. How does the support resistance trader work? Why I say retracement zone? Below that, it's all already balanced. This is the area where market could have, like the body to the high. This is the area where people looks it as a support or a resistance. When broken, it acts as a support. When below it, it acts as a resistance. When market was below that area, it acted as a resistance. Not with this green candle, especially this black candle. It retested the area, it created that zone, the very next candle fall below. When market traded above that, this is your support, market went higher. Same thing guys, here as well. If you can look properly, just because a fair value sitting above, it didn't came, but the close proximity, if you understand that, then this is the retracement of that imbalanced area. Below that, it's now balanced. Again, market went up until this far, retraced here. So when market went above that, this is the retracement zone, and you will see no body close below that area. See, so it's not hindsight that I'm showing you guys. And where is it going? It's not gonna stop somewhat around this area either. I don't believe these highs are the target for the market. Okay, you will see lot of reaction. Maybe by the end of the day it will not stop here, but that all-time high is what market is targeting right now. All these things you are seeing, after market reaches that, you will wait until you see something like this, that accumulation manipulation towards the upper portion. Then you want to wait until the distribution happens below these consolidations, and then you can look for the original level of consolidation from where the move started. You see this, market manipulated higher, so this is the first stage that market manipulated. Again, a lot of things in between happened. Look here, isn't this a consolidation, or it's a clean run like this, or clean move like this, or move like this, or move like this? This is where again reaccumulation happened. Market started going higher up until that far. Final stage of accumulation, manipulation, distribution. Again, non-stop green candles. Look, the retracement. It didn't have a single black candle inside. The moment it came to revisit that, did it even go back and took that liquidity? It didn't even take that. And this liquidity is still, until now, it is not taken, if I'm not wrong. Yeah, so this is where currently market is. Just look. What if market took that liquidity with that retracement or something? Then it would, there is a high probability market would go even that level. And at the same time, what did I say that I want to see at a old high at this level? Did market created any fair value? Now around this area, in 1 minute, let me go back to 1 minute and let me explain that this silver bullet. Okay, all time high, I don't know like how far it is. Let me turn off this on. It's 4-5 days. Okay, here. What are you seeing right here? Like, you have it on the higher time frame, but for the lower time frame, what are you seeing inside of this specific area? Market is literally trading inside of a zone. Now I'm looking into this thing from here until this low. Why I'm looking into this is because if you look into the, like, how you can identify is mostly with the body of the candle or with the wick of the candle. You see, like most of the bodies, this is the body and the wicks aligning right there. Even if you look into the right, look up until this far, nobody went above. So this is the accumulation phase that you are looking into on the lower time frame inside of a higher time frame accumulation phase. when market was trading here, okay, for the manipulation leg, I wanted to see that above that all-time high, the line I have created, I wanted to see if it creates a fair value or not around that area. Okay, at that level I wanted to see a fair value. If it fails to create that fair value, you saw me drawing this as my bag, because market already created that fair value. I marked it as a bag. Where is the reply mode? Here. So even not that candle, one more candle. When this fair value was created, this is the first fair value of the move. See, so I want to see this is acting as a bag, and the very next candle it's creating another fair value at that level, so somewhat around this area like this. I already this is my expectation, so I'm already drawing that, but I know what's happening in the market, but I don't know if it wants to after the manipulation, if it wants to provide the distribution straight away or not. I don't know that. How can I know? The very next candle will tell me the story. Look what happened. The very next candle came below, failed to create that fair value. So that is one thing that is already giving me an indication. There is another thing you will learn today if you are still here with me, which is the candle that took the liquidity. Okay, the candle that took the liquidity, which is this candle. If a black candle closes below that candle opening price, below that candle's opening price, if a black body can come below that, this is, I don't know if this is engulfing candle or not, but ICT calls it the change in state of delivery. This is the probability that market is not willing to go higher, it is going lower. Okay, that's the change in state of delivery. Again, the candle that took the liquidity, for the sell side as well, it's the same thing. The candle it took the liquidity, if a market can close below that candle's opening price, for the sell side the opening price will be on the top. So let's say this black candle took the liquidity, market was going lower, so this opening price, if a green candle can close above, you are looking into that as a change in state of delivery, and then wait until you get a fair value gap or something. So this is the change in state of delivery. My first indication here, it failed to create the fair value. Second indication, the change in state of delivery. Now this is no longer I'm looking into this as a back to enter into a long trade. Okay, this is how I save myself from fucking up my account every single day. Okay, when market came here, the very next candle, what it did, it traded the entire fair value. Is it a breakaway gap? No. The very next candle, what it did, it closed below the fair value, even this low. Now here is the thing, no market structure shift is valid if it does not create a fair value gap. No market structure shift is valid. If market is doing something like this and giving a structure shift, that's not a valid market structure shift, because it has to displace, and displacement means it will leave fair value gaps. You see, the fair value gap it left was right here, but on the same entry, what did I enter? I don't know if you guys can see this or not, but let me try to zoom it in. I don't know why it's just zooming in the options and not the videos. You see this, what did I enter? From that bag that you are seeing below that, and later on in this video you will see me like okay, it just zoomed in this sheet. Okay, so later on in this video I will rename it after, like, although that's not important, right? The name is not important. If you know the fair value, it's important. So I renamed it later on as IFVG, because at that moment taking entry is the most important thing than renaming that fair value. I know how to use it, I used it. It's for me. That's why, exactly that's the reason I don't live stream while I trade on my personal account. Okay, because I cannot answer questions. I have to write, look, everything I'm writing before it's happening. Okay, that should not be. I have written before it's happening. Okay, when market was literally giving me green candles, I was here, I was already, it's giving me green candle, I just zoomed in and drawing that. Okay, by the time it has already like created, it's in 2x or something, but you saw already I'm writing it. Now it's coming lower. How far has it reached that I'm still confident about that fair value? It's even retracing, see. But am I doing anything with my stop loss, anything with any other levels that I have? I'm doing nothing at all. I'm happy with 1 to 2 profit, but this level is already giving me more than that. I took that level. There was a reason behind that as well in the 1 minute and the fib levels that I had previously drawn. But look guys, here I have anticipated that 2.5 5 pip range. I will draw like 5 pip, 10 pip, 15 pip, 20 pip. Look at every level's rejection from this. Okay, here a rejection means not a huge backward move or something. That was the 5 pip level. Market has exactly tapped there. It didn't even came to the new week opening gap high. It just tapped there, it went higher. It accumulation happening. So I was expecting a manipulation towards the upside. That's why I have marked my min threshold. Look at my stop loss. When the manipulation happened on the upper side, by the meantime I actually received a subscriber as well. It didn't, I think it didn't even reach to the what it calls the min threshold. It came somewhat very close to the min threshold, then came lower, or maybe from here. But see that accumulation, the exact same thing today I showed you. Like this accumulation, I'm expecting a upper move fast so that the lower move can happen. Now what I did the mistake is, when at 5 standard deviation market was accumulating like this, that is an indication that it's willing to go even lower. So I could have moved my take profit from there until that 10 pip or 15 pip. These are the range. Now look, when market reaches each of those line, the first candle, the very next candle is a green candle. Even I was, look, when market is coming lower from here, I'm already pointing at those my take profit. Okay, and you will see me writing like hoping 15, and see I'm marking and moving and pointing that. But by the time I can write it, it already gave me my profit and almost reached over there. Now look at the very next level that market is reaching. 10 pips level reached, the very next candle is a green candle. Then 15 pips level reached, you will see the candle. 15 pips level, the same candle turned into a green candle. Again that way. Okay, I somehow exited there, but from that candle I'm still around that area. So wherever the 20 pip handle is, I will show you the calculation and you can understand. Okay, so yeah, I mean when market came here, the thing is I entered from the inversion, because this turned into a BPR, balance price range. Market can trade it completely, market can leave it completely. That's completely up to the market, but it's a better indication when you have fair values aligning. Why? The bullish on was supposed to act as a support. When market broke below that, now the bullish on is this one. Okay, let me actually change the color and turn it into different colors and BPR, you will understand. Okay, this bullish on, the red on right now, is now acting as a resistance. On the other hand, the bearish on that it has created, it should act as a resistance too. On the other hand, around the same level, what happened? Liquidity grab, market structure shift. Now you have a breaker block, you have 3 candles, consecutive candles that should act as a order block. So many level of defense you have. That's why I entered into a trade from here. Now my stop loss, I put it around this area, just because of the volatility of the market. It can still create some wicks, and there is a small little volume imbalance sitting here. If the volume imbalance not here, then this is the candle I would put my stop loss. Now look here, if I entered from that bearish fair value, I didn't get my entry. I don't know if you guys can see or not here. This was my entry, and both of those candles I took one lot each candle. Okay, every time it reached there I took a lot. See this is the low of the bearish fair value. Market never reached there. So people who are waiting for that entry for a tick or two, they never got the entry. But I know that, okay, how much I'm saving. Let's say I took 2 lots over here. My stop loss is here or even there, whatever, like wherever the stop loss is. How much by not taking entry at this level and waiting for that level, how much you think I'm saving over here? I have taken 2 lots entry. This is 63.75, that level is 64.50. This is less than $75, well, like 0.75, which is $15 per lot, which is $30 for 2 handles. When I'm willing to lose $600 or $500, I'm worried about that $30, and that's how people miss their entry. I'm not worried about that $30. Yeah, I would be worried if that fair value was like this and I'm entering from here, because now my stop loss is huge, and if market goes up until that area, then it will cover maybe another $200-300. That's why I will be worried about that if the fair value was looking like this. But it was looking like this, and that was just a tick or two. I don't worry about that. I enter here. The exact same thing when, as I was saying, let me go with a bit higher thing. Okay, now think this way. When the high or buy side was taken, this was the original consolidation low, and this was the original consolidation high. Inside of this leg, I can see another thing happened. Liquidity grab and a market structure shift at that level. It has created a fair value here, it has created a fair value here. Look, a fair value with volume, but I'm just keeping it aside just to show you the fair value. Okay, that it has created the fair value. Can you see that during this specific area? When it has created that, market came to the fair value, there were volume imbalances, whatever it is, I don't care about that, market went higher. Simple. So I have marked a projection over here. I'm not gonna project straight away. I will give you that, this one and this one. These are the 3 ways of marking your projection inside of this. Okay, you can even mark multiple other ways, but I'm mostly looking into that. Now let me give you my projection level. First thing, for the high of the day, if it's aligning or not. I can show you lot of other things step by step. I'm putting a standard deviation in black color from that level. It will be very confusing, but still I'm putting a standard deviation in blue color. I'm putting a standard deviation in orange color. Look where it came up until that far, that negative from the blue one, the A and B move of a liquidity grab market structure shift. That is your -2, right? I have removed or I have minimized a lot of other levels. Let me check the color. Okay, the blue one I don't need to readjust. Look here, 1.5 and 2 standard deviation. Look at the 1.75. where is it aligning? Where did the market came? Look at the, where is the other one, the black one? Yeah, what is the level? Can you see on the black? 0 and 1. So let's mark the 0.5 and actually 0.75, since I can already see. So all these 3 levels are aligning in between this area, which is here. Market went up until that level, the -2, which is the most important level, but still look, nobody closed above those area. Okay, from these 2 areas, it's very confusing, right guys? That's why I didn't give you straight away. Here and here in between this level is where market is stopped. And why I'm looking into that? Because all those 3 projections, this is the alignment happening over there. Now what gave me more confirmation? let me give you that. Market moves, what did I said little bit earlier, if you have noticed, that is 5 pip increment from its liquidity level. Let's took a note, that is the high, guys. This is the high. Okay, I'm not making it up, I'm not doing anything, and I'm not saying it because I saw it high side or something. The levels that you saw on the lower side, first I had them here, and not that candle. Let me start over again so that it doesn't mess up. Look at that high. Okay, I cannot even move it to the right, but again I will draw one more time. From that all-time high until this high, how many handles can you see over there? And that is where my 3 projections were aligning, right? Now this is the 5 pip, it could go 10, it could go 15, it could go 20, no or nothing wrong with that, but that 20 could have been my target if it could create a fair value at that level. So I'm not entering into a trade blindly. Now that you saw. Now let's see another thing, guys. From this specific area, this high to this low is a level of projection. From that specific area, this high to this low is a projection. From that specific area, that high to the initial liquidity low is a projection. Now let me change the color one more time. Black. Okay, it was black already, I don't know why I choose to do that. Then blue, which one turned blue, the high to this low. So now this one I have to turn orange. You see, wherever the levels are aligning the most, here I can see the 4 standard deviation and -1 standard deviation. Okay, at that level, what do I have? When market is aligning here, negative, just a second, let me rethink the whole thing one more time so that I can give you the perfect thing, because now it's been a very long. So on the left, on the right, no, I have done from here, so here to here, that one to this one, and what was my, where is the other? Okay, this is why. From the original consolidation high to the low, that was what I was about to look for. Look here, where my all 3 is projecting pretty beautifully. Okay, so where is my -2.5 is what the orange line is suggesting. That's what I'm taking. From what? From the high to the low, the A, B, C move. The same thing here, guys. Look, I will draw this one again. Market has taken liquidity, given you market structure shift. That -2 or 2 is 2.5 standard. This is the thing that aligning the perfect level over there. So let me remove the upper one. Let me take you the lower one, this one. So high, low, higher, high, liquidity grab, market structure shift. That -0.5, I will just mark this one because I will tell you why exactly I was looking into this. Okay, yeah, so let me hold and remove everything. This is the -2.5 standard deviation that you saw, because all 3 had literally pretty close to each other level sitting right there, and that is the most important level. So I'll just put something like this. Okay, you understand, this is the 2 point something. From that level, look until this, exactly 5. So I am putting a line over here as my 5 pip. Okay, from this level, where can the market go next? Another 5. What is the level over here? 36.25. so -5 handle is 31.25. let me put 31.25, this line 31.25. This is 10 pip from my projection. Okay, here again, what is this level? 31.50. Not, it should not be 50, it should be 25. Okay, here from 25, what is the next? 26.25. I don't know why 26.25 is why it's giving me on the 50 every time. Here 25, this is 15 pip. Okay, 1 5, and from here my 20 pip range, which is 21.25. here. Now look every level how market is actually giving you some rejection. I'm not talking about, see here green candle, see here you will see green candle. Now look on the very last level, this is 20. Okay, this is not 15, I just copied that level. So this is 20 pip range. When market came back to that level again, this is what you are looking into. Okay, here even if I'm not wrong, this one, yeah, the body here was the weekly new week opening gap low was where the body exactly tapped, and the new week opening gap high was right here in between that entire thing. Now you can see the body and the wicks respect. That is where it's aligning with the higher time frame. Market showed you the rejection. Everything I showed you here I have calculated before the market happened. Now there are so many things, I don't want to go through everything and make you guys like, I mean, this will be very confusing if I continue with this thing, but I just showed you how I figured out the high over here and how I figured out how far it can go from that area. Now it accumulated, it gave me the rejection or the strength more than it was required over here, but or I was expecting. But when the accumulation I saw, I was expecting either way I'm getting my profit. Think this way, if this manipulation happened lower, my profit was sitting right here. If you will see, my profit was sitting here. I didn't move it to the 15 tick because as I saw in that video as well, KD Pathak is doing there. KD Pathak here, just look, it at the buy side, but I saw the low, so you will see it's a tick or two. I'm moving it a tick or two below here, right here actually I'm moving it. So now here, okay, below that low, that's it. So even if the after this accumulation the manipulation happened lower and market again went higher, that was my take profit target, or I'll just write inducement so that it can be a different color. So that was my target. So even if from here market manipulated and took this liquidity, my target could have been filled first and then it could go higher. So whatever happened, it gave me more confident. Now what did I said about the liquidity level, this sort of levels, or even at these equal lows, I want to see a fair value around that from where it can continue lower. It continued lower, I took another entry here on the same day, maybe here or on this move, I cannot remember, but I took another entry because I saw it's willing to continue lower, most probably from here. If it's in my video as well, I cannot remember the whole thing. It's on Monday and today I'm talking on Friday, so yeah, that's how it is. It's in the video, you can watch it there. But did it created a fair value, and from that fair value is it going lower? Yes. Now from here it went again back higher, retraced somewhat around that area, and I will give you the dealing range. You see this dealing range, I was saying this should not be traded. Look the retracement. It's taking too long, so let me just clean it and I will show you the dealing range area on the chart. The first and last retracement happened. Where did it tapped? At the very bloody low of that measuring gap, went all the way down to where? Here. It never took even went to that area. So wherever I had my trailing stop loss during that moment, it's still going until this far. Even today, whatever the move you are seeing, it's still sitting below that area. So this last one, this one is a very important level for me, very important. I don't care, I will keep it for a long time in my chart. Okay, I will keep it for a long time until market goes above, close above, breaks this structure, creates new fair value around that area. It will be on my chart, even if it is a 1 minute one. Look, it's not a random area. Here, let me show you a funny thing, guys. You see this one? Let me go and keep that retracement level so that you can see the retracement as well. Let me go to the 15 minutes. There is nothing up there. The fair value is below. Market closed above that fair value. Okay, now what did I say about a fake breakout? This is the fake breakout, but fake how far? How far? 15 minutes tap happened even inside of that 1 minute area. I don't care what anyone else has to say about this area. That's my area. That's the area I have calculated. Okay, so yeah, brother Pikachu, that's what I said. Like, if you follow the instructions, watch the silver bullet, the dealing range type 1, type 2, and finish the video from the beginning to the end. Okay, there is a reason behind that. I have uploaded a video of 1 hour or 10 minutes or 7 minutes. Okay, if I didn't find it valuable or helpful to make you guys understand the fact, then I would never make it that long, because it's taking me more time to create that video as well, and I don't have that much time every day. You see these YouTube channels, look how many, like, damn, I need to watch your videos. Hey, yeah, I mean, I don't know, guys. I can see average watch, like how long people are watching each video, but inside of each video, look here, like, not because of me doing this, okay, like this video 7.5k days, I said it's a total of, okay, I didn't say one trade 7.5k. There is a reason behind that. One guy actually unsubscribed after this video. From this video I had a negative 1 subscriber, so I loved it, and I had saved a screenshot right at that moment, that whose loss is this? Is this my loss, when I don't even give a damn about the monetization or anything? I don't even upload on a consistently basis, so it's not my loss. If he's not finding value, he can leave. It's okay. I'm not here to argue with another and prove me right and someone else wrong. Okay, my results are giving me whatever I have done so far, or whatever I have learned. Here you are seeing so many levels, right? Let's see, like, I don't remember at I want to do. This is maybe the first time I'm asking. Okay, wait, okay, that was like at the end. Like 2500 each. So I hope the video or the information of I took one. Yeah, as you can see, I have taken another entry later on that day. That's what I was showing. Standard deviation. Okay, like that's the 3 standard deviation. Okay, here the 2.5 and 3 that I already mentioned the amount. That's not on my screen. It's drawn over there on a live market, as you can see, and I'm expecting from the 2 to 3, in between that area, market will create the low of the day. Okay, on which day is this? I don't know if you guys are seeing the, yeah, actually you are seeing the 2.5. I can see it from this end. So I was saying something like this. A lot of people didn't even watch until that far. I know. Standard and 3 standard deviation. Okay, like that's the 3 standard deviation. The okay, hold on a second. I actually forgot that my desktop audio is turned off, so you might not hear it clearly. $17,912.75. This is the area where my projection or my level is actually telling me that market can go 2 standard and 3 standard deviation. Okay, like that's the 3 standard deviation, the max I'm expecting market can go today. I'm not quite sure like until now where market has actually visited or went. However, the 3 standard deviation level is 17,912.75. I'm expecting at least market to go until that far. If market doesn't reach that far, then the minimum I'm expecting is $18,004. So by the time you're watching this video, if possible, check your chart if market has reached around that area or not. And 17,912 is the 3 standard deviation, negative 3 standard deviation from that measuring gap. If market is rejecting or reacting around that area, if I can find some good buy long setups, that is where I would consider looking for buy long setups, and that is the area I'm expecting market might create the low of the day. Okay, so I don't really know if that happened or not, but if it happened, then yes, you will get the thing with my upcoming lessons, the thing. Okay, so this was when? This was on the Tuesday. Okay, let me exit out of that. What was the level? Remember, 17,912 was where I was expecting the low of the day. 17,912 where market might go. See that low or those reactions from the negative 3. This is a 15-minute chart, guys. I was wrong by this much and I was right about all this. Okay, I expected this is where market can again. I'll actually clear that how far it actually went. 17,912.75 is where I was expecting market will create the low of the day. Now this was my negative 3 standard deviation. So let's see from here how far the chart went. Okay, first of all, let's count it in the pips, because no, actually it's in a 15 minutes, it will be very bigger pip range, but for now let's see about the standard deviation. So 2 standard, this is another 1 standard deviation. From 2 it went, so this was the negative 3 standard, it went until negative 4. And why I was expecting here was because of the hourly, if I'm not wrong, there was, yeah, so there was this fair value and inside of that there was the hourly fair value as well, and this was the unfilled amount. So I should have looked into the next standard deviation, that I didn't, because if market takes all this liquidity, it will go or revisit this unfilled amount, then it can go higher. So at least I should have predicted until that far, but as I said, I'm bearish from here. I'm talking about something from here, and market is trading until that level that I expected. What do I have to do with that much being wrong for the entire move? That it went even lower. I'm not wrong, it actually went even lower. So I was right, but I was not right by that small part. Okay, like I expected from here market can go higher, but it actually came even lower. Also, what I said, if I find a setup around this area for a buy long, I would look into that. So let's see, like this is 15 minutes time frame, around that liquidity grab market structure shift on the 15 minutes had anything better in 1 minute or not, around that area. Okay, so where was the liquidity grab happened? Here. Market structure shift happened there, but in 1 minute, where is the market structure shift? Here. Fair value 1, fair value 2. Fair value 1, that should act as a breakaway gap. Fair value 2, that should act as a entry gap. you found your entry right here, stop loss below the breakaway gap candles low, targeting what? The recent swing high, or at 122 you close a partial, move your stop loss to break even or wherever the calculated area is, which is in this case below that low. Okay, or even if you think this is a breakaway gap and market has created another fair value right there, so you can have moved it up until that candle's low, like the breakaway gap candle's low, whatever, I don't know, like even break even. Let's think later on market came maybe lower and stopped you out. If you are following me, you know why I target 122 as my first partial. Even today's trade I closed a partial at that level. I don't care, guys, I really don't care. This is the thing that I am trying to teach you. In 1 minute, this is a 33 handle move with a 16.5 handle stop loss. So even if you take one entry, this is giving you $660. I don't really need to hold a trade, close a partial, things like that. 1 to 2 is 1 to 2. I didn't even look into the left. I didn't even targeted that high. Nothing. Just 1 to 2 first. Take the partial, close. I know by the 15 minutes time frame that market later on came lower than that level, that the level that I was expecting here, market came lower. Am I making it up? You watch every single execution video I have, you even today. When I'm saying that this is the obvious low, where I should take the profit or close the position, market can do this or that, I'm still holding to see if it can actually deliver that 1 to 2 or not. So every video, every stream, every strategy or whatever I have uploaded in my channel, it will tell you that 1 to 2 is what I target. If I have a higher area, just look guys, above this area, above this small little high, like this is even 1 minute, there is nothing in this entire move where you can look for a possible take profit area. Does this look like a high probability when this area has so many things like candles? Look at how many candles around that area has. Depending on that, look at that high or even this high or even that high. Where is the high probability? These are the high probability areas. For that, market from here has to go all the way back there, disrespecting a lots of bearish fair value gaps when market is bearish on Tuesday. Because what happens usually, Monday accumulation, Tuesday manipulation, and Wednesday the distribution happens on Thursday. This is the continuation of the distribution. On Friday, market can either continue or it can trade back into the range, because it has to create that weekly wick, like here when market created the weekly wick with the manipulation. The weekly candle, it will start on Monday, it will accumulate around this area, it will trade lower. From the low, the manipulation is done. The same day, it will create a small little wick on the bottom. The very next day, it will start again, which is Wednesday. It will start from here. It will start to move higher like this. Okay. When it is moving higher, Friday, Thursday, what can happen? Thursday, it will move another level like this way. This is a weekly candle forming. Okay. From the opening until that area, okay, this is just a week. I don't know why I did all those things. So open, accumulation happened, manipulation happened. When the distribution phase starts, when market reaches above that Monday opening price, from here market is creating the body. So market is going higher. Tuesday, Wednesday and Thursday, market is continuing on the move. Friday, it can either continue or it can just trade from that Wednesday side. It can start to come lower inside of the trends and create a wick until this. Okay, the candle will look something like this on the weekly level. Now the lessons that I'm hey bro, what's up? I'm seeing you after a long time, and you are at the very end of my session, guys. I'm not liking it at all. You are at the very end of my session. So I was showing them the power of 1 to 2 around that area as well. Okay, anyway, nothing like that way. So yeah, now there is a reason that some Monday is not a accumulation day. You will see that as well. A lot of Mondays are not accumulating. Instead, it's giving you some impulsive move like upwards or impulsive move towards the downside. That thing will be cleared with the upcoming video series that I'm willing to upload. Now, where did I got it from? I will show you that, and then I will end my stream today because it's been nearly, I don't know how long, maybe 5-6 hours. Guys, I'm giving you all this. Okay, I'm giving you all this out of my are you serious? Just a second, guys. Let me sign in from a different window. I cannot use his entire thing, his mentorship. Okay, okay, there is a 10% off. Good. I might use that later on.
From right where you are trying to
you see all this introduction. Ali Khan, chartered private student of ICT, started 2017, days of pharmacist, discovered ICT in 18, whatever. You saw that? I have done his course as well, guys. Okay, I have paid for this thing, and I'm willing to give this to you guys for free, because if I use his method, that will be a problem. You see these different stages. If you know the stages, you will know which day you have to look for that consolidation. Not every Monday will be a consolidation. Why this Monday has consolidated? Because by Friday, if you look very closely to the chart, you will see the previous sell side delivery has market has already done. Okay, which started on the higher time frame, even hourly, 4 hours, that thing which started from here. What is that day? Thursday. By Thursday it's actually done. Okay, so on Friday it's starting a new phase over there. Or oh no, this is Tuesday, what I'm looking into. Where is it? Friday. Okay, that's a week worth of data that I'm looking into. Thursday, this is Tuesday, right? Yeah, so whatever, the Tuesday it has done it, so you can expect the next day it might have the consolidation phase as well. So the same thing started here on more time. Market accumulated, manipulated toward the buy side, market came up until this far, which is here, and remember the whole move is still due until that low. Okay, until this low. When market, what am I talking about? Just give me a second, guys. I already got out of my sync that the whole time I was talking about. So this one was already done here. Now market is looking for this. Yeah, so all these levels, let me remove it so that I don't get confused one more time. Here accumulation happened, manipulation happened. Now the distribution will happen when market takes the sell side first. It has taken the sell side, market went higher, market came again to take that sell side of that dealing range. Now this higher, it depends on this phase. Okay, like how far inside it can go, it depends based on this. That initial accumulation, this range, it can retest back inside of the middle point of this range as well. When market has retraced from there and came lower to take that liquidity, it has done its job, which was today's Asia session sell side. But so many things are still it's doing. For example, this this phase, again accumulation, manipulation happened to the lower one. Now this is Asia session, but what sort of accumulation it is doing. Remember what did I shared on my channel on the second video? You will see some days market is accumulating like this way. Okay, it is just generating sell side, especially the Asia session, the starting of the week. Okay, every day if you look into the ICT's core content, the first video, okay, first core content, month 1, first video, how the market starts with a consolidation, then a expansion. From the expansion it can either retrace or reverse. What you will never see is after a consolidation a reversal like this way. Whatever it is, the first move is the expansion move. So market starts with that consolidation where it already starts engineering liquidities. Market engineered liquidity below all this candle. I have already showed it in 1 minute. So it has done that. The manipulation happened toward the lower side at the London silver bullet time or after the London open. As you can see, like during the London, here is where market opened. Market came until this far, retested back into the fair value, came lower, took the liquidity. Then when market went above that fair value, this is where I showed you all the other things, like how I entered from the even around this area, what was my confluence regarding that, what I had around that. I have showed everything. If you missed it, you can go to the starting of the stream, you can find it over there, and then it's going higher. Now about this one, market can sometimes consolidate like this way, the one that I'm showing over here, or market can consolidate or engineer the liquidity like this is the trending market, engineer liquidity. Market took the buy side, market came straight towards the sell side. Now when the retracement happened over there, you will find on the 1 minute the whole thing. Market instead of going lower, it has taken that liquidity one more time. Okay, you will have shared it already, but anyway, let's see if I can find that one over there or not. You see this retracement when this was forming, okay, the whole thing, the one that I'm talking here, this retracement was the important level that market should not take the liquidity from, and market should come maybe here one more time, because that accumulation phase it happened. This is the retracement that came back and revisited that accumulation phase or the dealing range, however you want to mark it. OTG, yeah, this one, when the sell side is taken, that is when the range is formed. When market took there, like went there, and in the retracement when market took that high, this high, when it's broken, that buy side is the target for the market. Along with that, inside of this specific area, market was accumulating. Now this whole move, you can see from here, the bodies are closing at the same level. Okay, this from here until this area, all the bodies are closing at the same level, nothing closed above that area. So this is also your accumulation. Manipulation happened lower, distribution happened higher. At this time your silver bullet started. Where is your 3 a.m. right here? Okay, at 3 a.m. it has taken the Asia sell side, it has traded into your higher time frame point of interest. What was my strategy? That if it can take the Asia sell side and trade into the higher time frame point of interest, if it can give you the setup, you can enter from that setup. Now as I said, this entry I took, it was a riskier approach of that strategy, because as I said, I'm trading London session for last I don't know how many sessions that I have in witnessed all these things. So I know a lot of things that someone who is not trading London, it will be very confusing. So this is not the high probability entry that you could have taken. Okay, the high probability was when market broke above that swing high. Okay, this is a clear swing high that market broke above. This is the better option, but I'm seeing this one as my early catch of the move. That's what I'm saying it. Okay, when market was doing that, it has created two bullish fair value. See this fair value, when it was broken, it never revisited that fair value, it just revisited this fair value in 1 minute. Now if you are looking into the 15 minutes, I have already explained the whole thing around this area. This is one of the highest probability breaker over there. You could have taken from the breaker as well. The reason it's one of the highest is on the same move it has taken from multiple levels of liquidity. At the same time, it has taken a higher time frame liquidity or a sessions low. So that move and that breaker became one of the highest probability, and ICT said like this is among any blocks that he ever mentioned, this is among the highest probability one. Okay, what did he said? I will give you the video. I'm not willing to show you or play the video and wait until that level. Go to inner cycle channel or ICT's channel, search the breaker, just breaker. Okay, you see the advanced breaker, just code, not this one, advanced breaker, just 2023 here, advanced theory on breaker. Watch this video, a lot of concept will be clear to you guys. Here ICT mentioned it maybe 10 times, that when the same breaker or same move takes liquidity from multiple levels, especially if there is a higher time frame level of liquidity, that turns into your highest probability breaker ever. Okay, when market went above that, you don't need that 15 minutes sheet. Okay, because you are bullish now, you don't want to see that market is reacting here. It didn't react either, even in 1 minute it is straight away closed above. Okay, so keep that aside, look into that breaker, this one. This is the highest probability when market has taken liquidity from multiple levels at the same time, if the multiple level is a higher time frame level, which is this one, which is the your Asia session low. Okay, so this low will be appearing on your hourly chart as well. Okay, so that low is a important low, and when market broke above that area, closed above that. Okay, when the breaker listen, this middle point of the breaker should act as a mean threshold. It's like the order block thing. Okay, this middle point, it's a weak, doesn't matter, I don't care, that's the highest. Now here is your middle point of the entire breaker. You can look into that level as well. We look into the extreme, that's why I'm talking about the extreme. When was the breaker confirmed? When price closed above that area, or at least traded above that area. After that, every time market came here, this is your opportunity of entering into a trade. I'm not looking it into those things. Now along with the information I gave you here, if you had the same information, look until this, your accumulation happened right around this area. Okay, now I have explained this as well. Okay, whatever aligns the best with your concept, you are taking that one as your accumulation. You can take the bodies, you can take the wicks. Here I'm seeing mostly the bodies are aligning the best. I can take the bodies, but still the sell side was taken inside of the smallest possible fair value gap. Okay, I will show you the fair value. I don't care how small it is, if it's in a valid area, that's what important. Market traded there, market went higher. This breaker is the breaker that you should be using every single time, and that is the thing I'm still in editing. Okay, you see that fair value, I have called so many things beforehand, it was happening. That is the reason my entry, my stop loss trailing, look, it's in live market condition, I'm in entry. Okay, I'm calling out that this accumulation, I'm expecting this later on. That's exactly what market did. Even I called out that fair value as well. I have nothing else on the lower, this fair value, this, nothing like this fair value, this fair value. I'm not looking into those things. I entered from that fair value, I waited until market can do something like that. I marked the retracement zone, retracement happened inside of that zone. What is that zone? Look here, the breaker blocks upper wick. You see the retracement zone here? Now look at that middle point from that area. I don't like, this is not something that I will be looking into every single day, because if I'm looking into the breaker, I'm looking into this, but especially this one. This is the area I said retracement zone. Market will retrace here. Is it something that I'm not calling before that happened? Let's see if I'm calling that before that happened or not. When market went above that area here. This is the video I'm still editing. Okay, I didn't finish the editing, that's why I'm not uploading. It's like just speeding up the things. Still it's a 23 minutes video, so I wanted to exit out or remove something out of it. Look, retracement zone, I'm calling it when market was going higher. I was marking that area as my retracement zone. Now market came here how many times? What is that? After that retracement zone, what did I marked? Was that next move? That's exactly what I saw. Now you saw there is a line FVG. Before even market can go above that level, like when did I mark that FVG line? Just look, still that FVG line is over there. I'm expecting a fair value at the exactly that line. The reason I have already explained before, but for now, look, I have even edited it. Sorry, I have even edited it so that I can say that when market is going higher, I can say like, okay, it was what I was expecting. Okay, for some people this may get confused, like where is the FVG here? There is no FVG because I'm expecting FVG. That's why I'm putting a line over there just to keep reminding me that what I'm willing to see over there. Okay, so this is where I'm expecting FVG. You can see that dotted line bouncing here and there. Still I'm expecting a FVG. When market went above that level, look at that FVG at that level. Okay, like expecting a fair value over there. It's calculated, guys. It's not coming. I'm making $7,000-8,000 a day, and like almost every time I'm winning. It's not because I'm winning that way. Okay, I didn't I'm not winning because I'm just speculating everything. I just trade that one bloody session for the entire time. I lose as well. As I said, yesterday I lost as well. So where is the problem? Day before yesterday, day before like Monday, Tuesday, both of days I made a good amount of profit. Wednesday I lost a small little amount. On Thursday I again came back with a huge bounce back. So whatever I lost, I made more than nearly four times of my loss. So my loss is already recovered, and another 3 times is what I have gained today. So I'm making it how? The way I'm making it is I'm always trying to protect my balance more than increasing it, and that's actually giving me the thing. The day I'm making profit, I'm making 1400, 2000, 2400, 3000, around that level, something like above $1,000. The day I'm losing, I'm trying to minimize the loss as less as I can. On Tuesday, the entry I shared with you guys, or the in my video, like in my channel, the video you will see me, I have only one lot entry taken. The stop loss was only $165. The first entry, when I made the profit of 600. Okay, why I'm here I don't know, but anyway, so the stop loss was only $165, and the first entry, the level that I anticipated to take the profit from, it gave me 600 something, like 12 or 20 something like that. I cannot remember 12 or 20, but 600 plus. Okay, the second entry I took, I risked another $200 from here, $215 or something. I don't remember exactly the level. It's in the video. You can go through that video, you will understand. So I'm trying to protect some of this profit. If I'm on the right side or my trade is valid, I will add with that. If I'm not valid or on the right side with the second entry, I will lose some money, but still my balance will be profitable end of the day, because even if I, let's say I risk $400, okay, even $500, still I'm profitable by $100. That's a profit for me, guys. I don't care about the amount. The knowledge I'm getting, that's more important. Also, the yesterday's losing trade, when I looked back into it, it has given me so many insights. Now my losing trades will give me insights. If you are trying for yourself, if you are trying to learn something and improve yourself, you have to look into your losing trade, what you have miscalculated, misunderstood, or why can market go lower. Did you heard anything over there that you literally ignored, or you were thinking that market can go until this far, but you didn't waited for that move? Why I didn't anticipate anything before? Okay, why? Oh, come on. Here. Okay, when market was, what is the silver bullet here? See, the 3 a.m. happened, market was going higher with these candles. There is a bullish fair value, market tapped going higher. Why I didn't anticipate anything over there? Because I know where it is going from. It's not in my higher time frame point of interest. It didn't even take my sell side from Asia session. I'm not expecting market to go higher right now. I'm expecting a lower run first. When the lower run happened and then market started creating bullish fair value, this is my aggressive entry where I entered. If it stopped me out, I would enter again for long until I hit my max tolerance or risk tolerance. What do I mean by max risk tolerance? Is I take first entry, $600 to $750 is my max loss that I target each trade. When I hit my first entry, if it's a loss, the second entry is my max tolerance entry. So in one day I'm happy to lose up to $1,500. That's my max tolerance, but that's not my max daily loss limit. My max daily loss limit is 300k, 3k, $3,000. But I don't care about losing $3,000 a day. I care about losing that $1,500 a day, because I know I can get it back with just a 1 to 2 risk to reward profit. But if I risk more than that, this is where I'm in a drawdown. So if this one was a loss, whatever market came lower, took the liquidity, hit my stop loss, whatever happened, the next setup it will give me, I will have a lower high or this high rather than looking into that high as my market structure shift. Now I know how market structure shift work, so even if I didn't take the entry here, I would take the entry at once this market structure shift happened. And for last so many days I'm showing you how I utilize that fair value. Market closed above, I would consider entering from here. A stop loss, the candle that first closed inside of the market, inside of that area. So entry would look something like this. Now I know it's a huge stop loss because the moves looks huge, or if you look at the pip, it's only 17.25 pip. It's not a huge at all. First partial at that high that I anticipated, and if I want to take runner, that's a different story depending on how many lots I'm taking. This is my entry. Let's say, guys, okay, this is a inversion fair value. I have already shown you was other videos. This is for me the inversion fair value, because only this fair value and that fair value had the power to send price lower. Why? I have showed you my OTZ. I calculate OTZ, nothing else. When market traded inside of my optimal trading zone and it broke the last level of defense, that is where I'm happy to call it my inversion fair value. As simple as that. Let's say you are not entering from here, okay, you are waiting for the market to come until this fair value, then entry. You missed the entry for how much? Think this way, 17.25 tick is what you are willing to take the risk for, and here is 14.50. So that is less than 3 handle that you are taking your entry higher from here. That is less than 3 handle, because you are anyway willing to take entry from that fair value, right? So when market is coming close to it, you should take your entry from whatever level you can get, but close proximity entry. That's the close proximity. So if you are not entering from the top, when it was coming near to that level, that should be your first entry at the very beginning. If it can come here, if you are willing to add another lot, you can add another lot inside of that area, or even deep retracement inside of that fair value. So maybe until that far or at the middle you got the price, you take another entry, so the dollar cost average can come below that area, come around this. But you are missing because of this, and that fair value was never refilled. Now this is what, today is Thursday, March 7th. Let me show you I have already showed you the all-time high level from where I took my other thing. It's on my channel, right? That entry, okay? This is where exactly the same thing happened. Market failed to displace higher above the all-time high and create a fair value at that level. It failed. So that is the level where I entered. It's in my channel, and market never revisited that. Why? Because this is your balanced price range. So market does not, it's not a requirement for the market to revisit that area. Okay, it came lower. So whoever targeted that fair value, just look, they never got their entry and missed all this. Again, on Tuesday that I took the entry from, it will have the exact same thing. But before I go too far ahead, let me find out the Tuesday first. I'm still on Monday. 1 minute chart, come on. Okay, what you are looking into? So where is okay, it's still on Monday. Come on, how big is the 1 minute chart, guys? Tuesday. Okay, this is the Tuesday, and my London silver bullet time, let me put it first. I cannot, that's 4, where is that? 3 a.m. 3 here. My entry was right at this level. Okay, why? Because same thing, guys, market took the buy side liquidity, failed to displace higher, exactly what you saw on the all-time high. Okay, it failed to displace higher. Instead, the only fair value it created with that huge false move, it broke below that. So that is the level you will see in my video I took the entry from. Now look at the common, another exact same thing that I want to show you guys. Okay, I didn't mean to draw something over there. I was meant to do this. See that only bearish fair value market created? It never revisited, retested. How many I have shown? 3 days, 3 exact same entry, 3 exact same result. Are you getting it? Now test in your chart for more like this. Okay, so I'm willing to, dear brother, very sorry for the disappointment with my performance today. I will try my best. No worries, brother, it's not about my satisfaction. I'm more happy that you didn't find a setup, you didn't trade at all. That's the best thing, my brother. When you don't force the market, that is the best thing you are learning. If you want to practice one thing, this is the thing. Every day is not for trading. You have to understand that some days there will be huge move, but you will not find your entry. Some days there will be no move at all, but still you will find the entry. Look at this area. What was that price action? But I found my entry because I know how my London session works. I know how that fair value cannot be, sometimes market will do this. Okay, you see that I entered from here, guys. I didn't wait until market reached there. I had another entry sitting right at that order block level. If it can reach here, I'm willing to take another partial or as another lot into my entry. Other than that, I'm happy to take entry from here. Look, on this day as well, market didn't tap there. On the all-time high, I already showed you, but let me show you one last time as well. Like 3 days back to back. Am I making it up? In my channel, watch my 75k video, like the 75k challenge video. Every single entry I took based on my IFVG, my inversion. It's my inversion fair value. Okay, there might be controversy, this or that. I don't want to be in a shame game or blame game of those sort of thing. Entered here, that fair value, that bearish fair value that I'm here writing as BPR, market just for a tick, it never tapped there, because that is the area where market might have traded. That area turned into a balanced price range. It's not a requirement for the market anymore. That's why. Same thing I showed you Tuesday, same thing I showed you today as well. During the London silver bull, I mean, this is how I understand my London session. I don't care about any other session, New York AM, New York PM, this and that, same exact thing. That last fair value, that high, as I said, was your entry. This was your entry. It never came to the fair value that you are expecting. Okay, the only reason I'm putting a stop loss here is because if you want to watch it in your chart, I'm not willing to go all the way back to that all-time high or this recent thing or that. The candle that first closed inside of the fair value, even if there was no fair value like this, that candle's low could have been my stop loss. If I'm wrong about the whole thing, I'm wrong about this as well. For last weeks or last few days, I have been live streaming that exact same thing and putting my stop loss over there. So if I'm wrong about this candle or this entire thing, even if there is no fair value, that low should not be taken. If I'm wrong here. You will see market is going for that sell side liquidity, or at least this fair value. Now you are entering here, you are putting your stop loss below that breakaway gap, maybe here. If you can do that, that's good luck to you using that concept. But this is where I'm putting my stop loss, even if these fair values were not available over there. With that fair value, my entry has become more high probability, because now market has to break below a bearish fair value that was supposed to act as a resistance. Market closed above, now it should act as a support. At the same time, if by any mean I'm wrong about this fair value, this is the bullish fair value that should hold and send the price higher. I'm not looking into this fair value for my stop loss or something, that this is a breakaway gap, market should not fill it up, not that way. I'm looking into that first candle closed inside and the move that caused, like first candle closed inside with the move that break above that fair value, that candle. Let's say this candle closed here, then retraced back, then started the move. Whatever the move that broke above that fair value, okay, that moves first candle, the candle that closed inside. If this candle was starting from around this and this one was closing below that fair value gap, somewhat around this area, I would consider that candle's low as my stop loss. Even if there is a fair value below that, I would consider that candle's low as my stop loss. Okay, if this one was not trading inside, let's say it closed around that level, okay, like that line I'm gonna mark as a black line, and think this candle starting from here closed inside instead of the top, and that one broke above. So that candle high, that candle's low, this candle's low, if it was here, I would put here. If it was here around that area, I would put there, because that is how I have been looking into the fair value for last days after days. Okay, and once market traded above that level, my breaker level, this is where I said retracement. I'm looking for a retracement into that area, even not into the bodies of the breaker, because you know why I look into the retracement. 1 2 3 move, that's why. The power of 3, liquidity grab, market structure shift. So the retracement does not need to happen inside of all this, the deep retracement. It's not necessary anymore. And this entire move, okay, entire black candles move, this is all of your order block. All of them are your order block. I don't care if anyone has any argument, any doubt about that. I don't care. This is all of your order block. Your order block has to take liquidity, come out of a fair value or something. When that happened, and also during that area, market has to create fair value gaps. Your order block has to have fair value gaps. Once that happens, this is my first order block. After that, whatever market creates, until all this, only this is a propulsion block that I'm looking into, not this huge black candle, because it has no fair value gap over there. Now there is another thing, actually, sorry, this set of candles should be the order block. This, it's trading, taking liquidity, trading inside of a fair value gap. When market closed above that area, that order block is confirmed. So these two has no power, nothing at all. It's sitting inside of that black candles block. This is something I'm not utilizing as my order block, that market, if it is respecting this candle. These are the candles that I'm looking into. If though that black candle was sitting higher than the order block, I would consider that as my propulsion block. You mean the first candle close or week is enough? You mean the first candle? What's happening? Okay, you have, I think you might have removed because of it copy pasted the same thing. Let's see. Don't continue tomorrow. Yeah, tomorrow non-farm payroll. You want to see, like, I don't know if you are still here or not, but here you see, like, I'm putting so many things over here. Daylight saving, the non-farm I already know from the beginning of the week. This Sunday the -5 UTC will be -4, so keep that in mind as well. So I have kept a anchored text over here so that I don't forget, okay, like the anchored on this one, the second one. If you write, it will remain on the middle. Wherever you move your chart, it will stay at the same position, okay. So yeah, I have kept it there. Thanks for the reminder, but yeah, none from I already saw it, so I'm waiting until that. But London, I guess usually it's good, but I'm not willing to rush into any trade if I see like so many weeks during my London session. I will avoid that. So do you mean the first candle close inside? Yeah, FVG or week through FVG? No, the candle that first came in. Okay, think this way. I will draw it. I hope you will understand it. So this is the fair value, okay, inversion. The stop loss that I'm looking into is, let's say, a move happened like this way. Now from here again a green candle, or even nothing happened like that. The move is going something like this, the move that broke the fair value and closed above, okay, the move that broke and closed above. Before that, whatever, wherever the things happened, whatever, you don't care about that, only about the move, the leg that has done that, caused that damage. In that leg, whichever candle first came inside and closed inside that fair value. So what do I mean by that? Let's say there is another move before that happened, and market came inside up until this far. It came again lower, did something like this, and this is the rest of the move. Again market has, okay, I'm doing it on NQ. I think it is the problem with the NQ1, because all this time I have been drawing, no problem. There are no problem. I'm talking about, this is the fair value. You are expecting it should act as a bearish on, but market broke above. So you are expecting something like this, a move that broke, actually I got another idea to make things okay. It's still moving like that way, so I don't know if the drawing I should draw like this way or let's say this is how it broke. Okay, I'll just make a different point. Okay, this is one candle, this is another candle, this is another candle. So the first candle that closed inside, let's say this candle didn't close inside, so the previous candle, so wherever the first candle that closed, that candle's low is where you will put your stop loss. So here, okay, now if this candle closed inside, then my stop loss has to go all the way there. Okay, again, let's say before this break or before this one move, market previously came, why is it's not drawing, and okay, I don't know, something, market came here, did something like this. Okay, whatever, like whatever did market inside of that fair value, it kept some portion open, that is most important. Firstly, market came lower, market broke above that fair value, so whatever the first candle closed inside of that this leg, that candle's low will be your stop loss. Nothing, you don't need to look for anything around this area or around this area, anything like that. Okay, this the first one you're looking here, that's what I'm saying. For example, let me say, you see this one, so that's the only candle that broke the whole thing. So your stop loss will be here, entry will be there, not based on the fair value, just based on that level here, if market is giving you the entry, something like that. Okay, like based on your daily bias and thing, you are not using every single one, but it is what it is, you can utilize. Where is, let me see anything I can show you. There is a volume imbalance that actually caused a problem, but it is what it is. Here you see, this is the candle, in a glance it closed inside and did that. Okay, this is your stop loss, but it never, this candle never closed in, it created the fair value, it never, it cannot close inside. So this is the candle that you are looking into. Okay, and then entering, once it closes, the very next retracement is your entry. You don't want to wait, this is the 1 minute thing, 1 minute, the same time frame. If it was in 15 minutes that you are looking and you are entering from the 15 minutes, it's the same thing on the 15 minutes as well. Okay, go check in the 15 minutes. Here you see, this candle is what closed inside, then the market closed above, even though there is a fair value, I'm putting it here. Okay, I don't care about that. See, the every time market came, it came below that fair value with the wicks, I'm not saying like with the body, but with the wicks it came below that fair value, so it could easily go and stop you out over there. But so far I have seen this is the way market rejects or respects. If you are entering from the perfect thing or right thing, this is what you will find most of the time. It will not come until that far. So in this case, for example, even if you enter a trade from there, okay, forget about that fair value, you are entering based on this fair value, either you will put your stop loss below that low or you will put your stop loss below that swing low. Now if you are wrong, you are losing 3.2, like it's still not a huge one, I'm showing just to give you example, like you are losing more money, that is the example, than if you are wrong here, you are losing. Because most of the time, if it stops you here, like most means as long as I can remember or I can give you guys the examples of, If it stops you here, it will stop you there as well, because even like I didn't look into these price actions. Remember I was talking something, it has relative equal lows over there. If market can come and stop you here, it will create another low around this area. So after creating one low, two low, three low, which is here, what is the chance that market is not taking all of them and it's going higher to take this, because this high has already taken this liquidity. So it is a single high sitting right here in front of you, and there are three levels of liquidity sitting. If you even count that, that is a huge week. So I would consider maybe until that body or the 50% of that week, something like that. So these are the levels that you can see sitting right here, and you have only that high. What is the chance? So if it stops you here, you are just saving that much of money. What is the thing here? 1.75, and you are putting here 3.25, almost double the stop loss size. Okay, this is how I look. Like wherever I'm not willing to be wrong, I will put my stop loss there. If I'm wrong about that, I'm wrong about the market for that moment. If it hits my stop loss, I'm happy to take that loss, because that will happen maybe once or twice, and the chances of me getting on to the right side will be more, because I'm observing it for the longer time. As simple as that. So I hope that is clear. Now it's been a very long time. I'm actually not, like 6 hours already. Come on guys. When I sat on my computer, my intention was like 1 hour or 2 hour maximum. Oh my god, it's 7:21 a.m. in my place, and I didn't even realize that I didn't sleep the whole night. So yeah, even before I go cranky or sleep on my desk, let me finish it here. I hope it was insightful. I don't know like how much I have been able to give you guys during the whole session, or whatever the contents I'm providing. Yeah, I mean, if you find it valuable, then I'm happy with that. I don't care about the monetization. I will upload videos whenever I get time, and whenever I feel like I have something qualityful or something educational that I can offer to you guys, I will upload videos only those moments. You saw me calling out things before it's happening, and it's all calculation. I'm not predicting things. It's not prediction. It's prediction with calculation. That's why the probability, when you combine multiple things, why you need to have a fair value gap around a breaker to have to act as a high probability, because fair value itself is a level that can act as a PD array or premium discount array. Breaker is also another premium discount array. So two arrays, when it's aligning at a level, it becomes high probability. Same, why order block has to have a fair value gap in its leg or in at its range. Why? Because if there is a fair value, then when market is retesting or revisiting that order block, that fair value will make it more stronger, right? Rather than just a single black candle. Look into order blocks that has a fair value on the move. Okay, when the order block was confirming, market was confirming the order block, look into that when it creates a fair value gap. Okay, and look into those candles mean threshold, then you will find the real order block. And as I said, everything has the target, immediate target. Look, this high from where market is retracing, that is the fair value. Like you see, there is a fair value as well. I don't care about the size, I care about the position and placement. This is the premium from the low to high. Okay, so that high, when market traded here, that is the level market will target the first moment. Now here, along with that, market again retested the same level, went to that level. When market was going there, it created more fair value. So first fair value, Second option is your volume imbalance, then this fair value. This is the level for the market. It's not all the way up there. It will tell you if it wants to go all the way up or not. When it will tell you at that level, see the fair value, the previous high from where market was retesting or retesting here, going higher. When it went above that, it has created a fair value. Look, here it failed, here it failed. So when 2 times it failed, there is no way that you are still looking for a higher run straight away. You are now looking for a lower run and wait until the same thing happens on the lower side. At that low, market didn't create a fair value. At this low, market created this fair value. Okay, that's how it works. Continuation, the sweep and the run, yeah, I have learned it from other people's, maybe Arjo or the fair value god, if you can understand. He cleared it for me. Now why I'm telling you this is because I have spent so many sleepless night to figure this thing or to memorize or to master this thing for myself. Okay, this is for myself, that I don't like when I'm sharing it with you guys don't need to do the same thing over and over again. But if you can do that, you will be better than me, guys. You don't need me to learn, or you don't need my channel to learn all these things. You can go to ICT's channel, learn from him, but you have to do the grinding. I might give you some guidance, or I might help you with some questions, or maybe we can share with our thoughts with each other with what we both can improve. This channel is for that. It's not for making money, monetization, anything, nothing. Even if it gets to the level, I might not even monetize it at all. As I said, if ever it makes any money, I will donate it all. So for that good cause or something, I might monetize, but if it was for me, I would never even consider that. Look at my consistency on the uploads. I upload here and there. If I wish to upload, I will upload. When I have something to offer to you guys, I will upload. Otherwise, I don't care. Weeks after weeks, it will sit over there. Now I have something, as I said, the Ali Khan. Okay, this one, the course that I paid, I'm willing to give you that for free. And since I cannot give you the exact same thing from his channel or his mentorship, because that might violate some terms and conditions and I might be in problem, I will give you the exact opposite. He discussed the market maker sell model. I will give you the exact opposite, market maker buy model. Don't worry, I will copy him and I will put it in my channel. But his thing has so many problems. When I was learning or when I was watching all those things, he still has problems. Like one information in video 1 will make reference in video 4. Okay, but the content that he made on video 4, it could have been at video 2. So you could have a sequential content that you could use, but it didn't do it like that way. Maybe because when he was making the course, he didn't realize it, or maybe he thought the other thing will be important. So now that I have figured out that okay, this one is needed to be at number 2 and number 2 can go to number 4. Think like that way. Now I'm trying to give you step by step what you need to calculate or count. After that, you can utilize that in your learning curve and practice curve. Once you are done with understanding, proper eye training, then only you can actually go to the utilization of something. First you need a result for yourself as well. If you miscalculate or miss just few things, then you will not get the profit. I'm looking into that. Look how maybe it's been already 4 months when I have uploaded that accumulation, manipulation, distribution, that dealing range video. So I'm using it all, even if that was the first day I was starting to use it, which it was not, but I'm just saying for the sake of the example. It's been already 5 months I'm doing that or looking into that. So 5 months I'm looking into that one thing. How many models or how many things I have shared over there? Only the silver bullet as a strategy, and to support that Dillingham type 1 and type 2. These are the three things. So what do you think, with 5-6 months, three things if I look into that I have been doing every single day, every single week, have I got something out of it? That's why I'm making the money and you are not making it, or maybe someone else is not making it because they are not doing the hard work. I have given you how to look into the chart. You are not looking into the chart that way. How can you find it when it is happening in front of your eyes? You will be too scared to take an entry on a bigger move. I was not scared during the London session to enter because I know where market is going, right? After this move, just look at the size on this on single, like before the candles it was moving like 0.75, 0.50, 1.25, 1.75. look, 4.75. after a move like this I entered from, okay, this is not the thing, I think I'm looking into the wrong area. It was even bigger. Where is it? Anyway, you already saw, I mean referring to, I think this is the one. Yeah, 3M, of course this is the one. Then why it's oh, okay, somehow the chart changed into the S&P 500. That's why it was not making sense. Okay, because the fair value was looking way better than what it was looking. Now you look over here. Okay, look, $21 negative candle. Before this candle there you will not find a single on until this area. Okay, even it's only $11. It's not even that size. So there is not a single candle like that or single move like that. Entire range, the entire Asia session, the London session starting, nowhere had a move like that. But still I looked into a trade from that fair value. When the first one was created, on the second one I entered. How? Pure gamble? Okay, I'm the best gambler on earth who can make every single day money. As I said, yeah, it was not the high probability, it was not the highest probability, but I know what to look for with the next move. That's why when the move happened, you saw my stop loss, I moved right here. I didn't even wait until taking or closing a partial, because I know when that fair value is broken, my stop loss, if I enter based on that, this is my stop loss. So I just saved this much of my money by entering earlier. As simple as that. So this is why I'm willing to take this risk every single time I get it. I know how Asia sell side, the higher time frame point of interest below the Asia sell side, when it's taken, how market works. I know I have been doing it for nearly now 1.5 years or maybe more, and every single day in all of those days, the day I didn't trade, I even, whatever, let's say I'm sick or something, I'm laying on my bed on my laptop, I'm looking into the chart. Maybe after it happened, but still I'm looking into the chart. That okay, it has taken the sell side, it has given me the buy side. Okay, this day it didn't give me that. Why? Because during the silver bullet, market didn't reach into any higher time frame point of interest. That's how I figured out, okay, even market is, for example, why I'm not taking a sell short after this huge move from this level. My very first entry of the day is a profitable entry, and I am catching the lowest possible area or range of that price. This is the low of the day, guys. This is the low of the day. This is where I entered. Look where the market is. So I caught the low of the day over there, because I know on a bullish day market, when it's time for the higher expansion, market will expand, and London is the session, London or Asia will be the session that will create the low of the day. And most of the time you will see that low or high of the day is created by those two. Why I'm referring to two sessions? Because how many sessions do you have in New York? New York AM session, New York PM session. So think that way as well. Mostly London is the one that does that, but you will see sometimes Asia is doing as well, and that will happen depending on the price range where exactly you are sitting. The weekly cycle will change based on that. The market maker buy, market maker sell, it changes those things. Lot of time you will see on Monday market is bullish like a crazy bastard. Okay, it's not even stopping anywhere during the sorry, not even London, Asia. A lot of they will see it. Asia is running like a crazy one. There are so many days that happened. I saw even in my channel, I think I have a small little video regarding that as well, that even before the market opened I made 700 $800 with just one lot or two lot, something like that. I risk based on my stop loss amount, I don't risk based on the quantity. Okay, so whatever my stop loss allows me to take a entry, I will take that many lots. Anyway, so yeah, I mean, I should go now. I wish you guys all the best for the upcoming things, and as I said, that's something that cost me more than $700. I'm willing to give you guys for free, and also I'm putting my own effort to make that video as well for you guys. I really don't need to put that extra effort or provide it to you guys, but since I care, my focus is to help other. So this is, you think this is the fastest step of that. Okay, if it can help you, I will be grateful that okay, I bought something, I used something for myself that other people are finding valuable as well. As simple as that. I think that's my goal. So until next time, take a very good care of yourself, your health, and your loved ones, and bye bye.